Good morning. Good morning. All right. Coinbase moving higher. Coinbase got approval to trade futures, so that's a good thing. Let's see. We've got 8 minutes to go for the opening bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 16th. Mondo, 90%, 95% probability I'm going to drive up to New Jersey this weekend for my friend's wife's funeral. I don't know if we can get together and have a beer. I'll be up in Cresskill near Harrington. And we just meet for a couple of minutes and shake hands because I'm going to drive up, probably stay a few hours, and then drive right back. I don't know. It'll probably be the next day. I'll probably sleep over one of their houses or something, one of our friends' houses. But yeah, I'll be up in New Jersey on Saturday morning to go to the funeral. So yeah, there's that. Yes, exactly. Exactly. You hit the nail on the head. Hmm. Okay, I got what was I going to do here? Oh, okay, I want to do that. Okay, we got 5 minutes to go. 5 minutes to go. Let's see. Let me just check out NYMO as well, David. All right. Yeah, whenever NYMO gets this oversold, tends to be yep. Looks good. NYMO looking good. Okay, let's get ready for the opening bell. Okay, 2 minutes to go. Less than 2 minutes to go. All right, let's get ready. NVIDIA up, obviously, pre-market. And we're open.
Chinese economic weakness and falling prices are likely to spill over into global markets. The near-term perspective for Western central banks fighting inflation, again according to research from PIMCO.
Certainly not going to be a soft landing or a hard landing. But China, they crashed years ago. If you remember, in 2015, you were here, I was here.
Okay, watching Kava.
TickStrike allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at TickStrike.com.
Okay, Roku. Remember, I'm looking at buying some Roku.
also starved them. The Trump tariffs hurt them. More importantly, we've really shut them down in terms of our high-end technology. Right. Will they lash out, or will they go the Kissinger way? Kissinger, who's 100, met with Xi. Yes. There's a tremendous fondness for Kissinger over there. He's as clear as a bell. They need to go Kissinger. They need to sit down with Kissinger to try to figure out a way to get with Biden. I think their only way right now to get growth.
Trying to sell some Kava 55 calls for 370 or better. I'll just put a limit order and see if it fills. Energy bouncing, energy bounce. All right, watch your energy stocks. Energy's on the move after 1 day off. Okay, we've got 50% of sectors green, led by energy.
She treated it like it was just an old home week. They got to get Kissinger to be able to bridge the two countries.
We'll see. I mean, definitely you got Blinken, Yellen, Raimondo on the list of people. Interesting. There was a note out of Goldman that hedge funds have been selling China names 8 out of 10 sessions on the Prime book.
Well, they have to. I mean, China's pathetic right now. You have crony institutions that need to be taken over by the government and refinanced. Now, remember, the government's they can do whatever they want. I mean, one of the reasons why every time we're worried about them, like in 2015, they just said, okay, look, I don't know if anyone remember, but the Chinese are chartists, the government.
Coinbase just chopping around. Give it a few minutes for.
Done a lot of work on this, and they decided to draw a line in the sand in 2015. Said, we're done. You're done selling. And if you do sell, there could be implications. Now, implications in China, they do have a lot of white collar, let's say, capital punishment. And so if they say, listen, everyone's done selling, and no one's going to redeem, you're not redeeming. Right. So there is a solution, but it's not the kind of solution we can get.
Right. Your other point this morning, last thing on China here, is that if we were really going to catch a cold from them, our 10-year would be at, you said, 3 3/4.
Kava still dipping. Let's see. Morgan Stanley adjusts price target on Kava to 45 from 43. Stifel adjusts price targets to 55. Baird price target Kava 58. I'm sure there's more. Okay, Roku pulling back. Let's see. S&P. All right. We're 4 minutes into the trading day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're watching the futures turn back up. NYMO hit a level it hasn't seen in a while, minus 71. That's the lowest it's been in some time. What's NVIDIA doing? NVIDIA.
Versus 5% decline for the NDX, Jim. What price declines on the XDS?
Coles is a bit higher.
He's basically said, listen, not unlike the great Rockefeller, who said, look, I will sell oil below everyone. And when I'm done, I'll have 100% of the market. Now, Theodore Roosevelt was not in favor of that. But I have to tell you, it's almost like Musk
Watching the S&P for a turn higher. Holding for now. Bitcoin, even though Coinbase has been approved to offer futures, Bitcoin is lower. ARK-K continues lower. ARK-K. With Tesla gapping down this morning. Tesla's starting to move now. Tesla. Tesla on the move. Thank you, Corey. Boeing. Nice. Boeing's up $1. Boeing needs to get back above 242 or so. U.S. Steel gapping up after, wow, my bad. U.S. Steel is a bit higher now from the close. It's up 39 cents. We're waiting for another offer. 35 was the last offer from S-Mark. All right, nice bounce. Nice bounce, 44, 43. We need to get above 44.50. 44.50 is right overhead. Okay, S&P headed towards 44.50. Watch for a rejection there. If we blast through that, there's a lot of options monetizing here. A lot of puts monetizing. Okay, nice bounce so far. All right, sector-wise, we had 50-50 to start the day. It's starting to gain more sectors going green. Energy still leading. More sectors going green. It was 50%. Now it's about 60% as we bounce. NASDAQ 100, 50-50. NASDAQ 100 is 50-50. Old Dominion Freight is number 1. Old Dominion. Whoa, look at Old Dominion. Sucker's going.
Do you not believe this line about regulatory hurdles?
No, it is true. It's just that, and look, the stock's doing better. He's got a lot of plans to do better. Mobileye turned out to be a good acquisition, but I understand it's never talked about the way big things there. Semis are all. So Intel is actually riding the wave, but I thought is their spot.
Yeah, NVIDIA was on our first watch list at 33.50 buy.
You were out on Friday, but Wolf did have this. They had this technical note suggesting that maybe you would consider going long Intel short NVIDIA.
Ross Stores following through, pushing higher. Lulu looks like it's going to trend higher. Lulu. NVIDIA. CSX Rails turning the corner from the lows.
Business, it may go national. Kava is that business. This is a terrific store. A lot of people don't believe it because the IPO came in a period that's rough. But and by the way, you like what you have Ron Shane. Yep, I love Ron. But but this Kava has it is in sync with what the younger generation wants. A lot of it, a lot of vegetarians.
S&P 500 now positive, last up 0.18%, and the Dow up 0.45%.
All that said, Jim, about eating out, there's still a lot of discussion about whether or not Walmart will raise their guidance.
Yeah, Mondo, I see price action S&P 500 at the mid Bollinger Bands on the 5-minute. I know that's your strategy. Using a 5-minute. Were you talking Kimberly Clark? You talking about toilet paper, KMB? All right, CSX turn from the lows. Is he talking CSX? Walmart moving higher.
I will tell you that the school supply section of Walmart is lights out. It's lights out. And I know people say, well, what's Kramer talking about? Well, this is back to school. And they've got the right stuff. They've got the right stuff.
Yeah, I just walked by Walmart's school supply section. They definitely got everything anyone could possibly need. Energy bouncing after dipping yesterday. Inside day. Getting a nice reversal on energy. Tornado starting to turn now. Tornado.
Speaking of packaged, KDP, UBS ups to buy.
I'm so glad you brought
They
that
go
up.
to 42.
Now, okay, so Bob Canford, who was sold Pinnacle Foods, is one of the great brand managers of all time. I've been waiting for this breakout by Canford, and it's here. The earnings inflection is here. Valuation, it sells at 17 times earnings. Used to sell at 20. Keurig is back and it's bigger than ever. A lot of people feel that Nespresso's going to kill him. You're not going to crush Bob Canford. He is a brand man through and through.
Caterpillar, watching Caterpillar.
Like a lot of considerations in there, whether it's eat at home or away or currency effects, right?
Well, yeah. I mean, look, it's a hard company to understand where it fits. They bought this company where you used to make your sodas at home.
All right, Caterpillar on the bounce. Caterpillar could looking for a bullish engulfing.
It's been 10 years, and I think that's still smells of ginger.
Last one we'll touch on, Jim, today is GE Healthcare. Wells overweight, about 90.
Cat looking for a bullish engulfing day.
Shut down from 81 to 70. Trust owns it. We waited 10 points to pull back. This is an outbound play. So what's going to happen is both the buy
Stop low in the day. Caterpillar. Here goes the S&P. S&P starting to go. Gets above 4450. S&P.
because there's such demand for trying to stave off dementia. And how are you going to do it? Well, you need an MRI. Who's going to give you an MRI? Now, that piece says it's not going to happen until 2025. That piece is wrong. It's 2024. Now, how do I know this? Because of my work as the
Be nice, you guys.
I was going to speak 2 hours about my problems with my brain. They cut me short.
Mm.
By the way, he was speaking of healthcare before we go.
Okay, nice bounce. If we get through 4450, look for 4475-ish. Let's go take a look at the levels. All right, so 4400 support, 4450 is resistance. We get above 4450. Next level is 4475.
Industrial production. We'll get some Atlanta Fed inflation expectations. And then, of course, this afternoon, 2 p.m. Eastern, FOMC minutes. Don't go away.
$44.75 is next. Okay, so far so good. Let's go take a look at the S&P 500. Okay, got some damage yesterday. We're below the 50-day. What I found interesting is Brent's update talking about, let me see, let me quote what he had to say here. Gamma Lama Ding Dong. The options market is not reflecting much of a downside demand for now in equity prices. If you look at that chart, it's turning up on the Gamma update. Okay. Okay, that looks pretty good. 30 days till expiration. 1 month's S&P skew has hardly budged. So that's telling you what institutions are up to. If they were hedging actively, if they thought that there was going to be a lot of downside demand for equity prices, Skew would be moving higher. Let's see. There is some, but not a lot. Let's go take a look at skew. Okay, so we got rejected at 44.50. That's an area. 44.50 rejected.
165 or so here. Most components in the green led by travelers. Cisco is the second worst performer behind Intel. And we will talk to Chuck Robbins tomorrow on the heels of their results later on tonight. Make sure you join us for that at 9 a.m. Eastern Time. We're back in a moment.
That's skew. Okay, so if the institutions were positioning heavily for more downside, you'd see this line spiking up into the red zone. Okay. Yeah, 44.50 major resistance. Gamma. Okay, so all right, back to S&P. If we get above 44.50, could run. Hope everyone's having a good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, the 16th, and we are almost 30 minutes into the trading day. All right, so we had a nice bounce so far. Looks like that 447 level is hot again, 447. Yeah, 447 is a level again today. Seeing puts at 447 on the SPY, 447. That's overhead. And a little bit of calls down here. 0 day. Okay, Tesla continuation. Tesla continues. +2. All right, FANG stocks. FANG stocks moving higher. Tesla, Apple, Microsoft trying to go green. Apple's up 40 cents. Amazon bouncing. Rejected at 44.50 so far. Tesla back to yesterday's closing levels. Still in a descending pattern on a 60-minute. Got a lot of work to do for Tesla. Okay, NYMO has been showing yellow candles, interpreting that as a potential turn. NYMO moved from minus 72 rising to 56, minus 56. Intraday, NYMO is improving. Tick cumulative still hasn't turned back up. We got 1-to-1 up volume on the NASDAQ for now. Let's see what the 5-minute looks like. 5-minute is trying to cross. Tick cumulative still in a descending pattern though. Okay, so 44, let's see, trading ticks, 44.25, 44.50, lots of calls in this area.
This stream is sponsored by To The Tick. Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
Interesting though, as we mentioned the last hour, JP Morgan's Chris Workers today says paid the squeeze, that the midpoint of the guidance on operating margin of 4.6 is still below the street of 5.5, and until those two things come in line.
Okay, so we are a little bit more than 30 minutes into the trading day. All sorts of interpretations of the current algo-inspired market imbalances. We're pulling back a bit right now from 44.50 resistance. For now, resistance.
He's also watchful of the student loan impact. Remember, students are going to have to repay loans starting in the fall. So that's where the position of caution comes in here.
Kind of rhymes with the Depot's call yesterday where they said comps were edging back to the flat line in July. And it definitely ties into what we got trend-wise from retail sales yesterday, where consumers feeling more confident and inflation expectations are reined in. Atlanta Fed's at 5 and Goldman's at 2.2.
I told you it's Atlanta Fed after that retail sales report. I mean, it moves from 4.1 to 5. That is an economy that is booming, which nobody expected. Now, the caveat is we're still a little early in the cycle to make some predictions for third quarter because we just have the second quarter numbers. But so far, the numbers coming in pretty good, and it raises the question about whether in this kind of environment we can continue to see inflation moving down to the Fed's 2% target. The story has been one of disinflation and better economy. That's the Goldilocks scenario. It's what the market has liked. But if we're going to start talking about cuts in 2024, have we seen enough for disinflation to continue moving down in a straight line. Wages are high, labor market is still tight, unemployment rate is not going up, companies are still doing well. All of these factors, consumer spending has cooled, but it's not falling off a cliff. None of that really jives with the idea that inflation gets crushed, at least in the tech.
Unless you're
All right, we got a bounce, higher low.
That to come to the rescue. Work week gets cut, total payout falls. Corn today at a 2-year low, right?
We know
Seltzer's
commodities,
on the run.
well, Seltzer's going to be the key. We know commodities have done the heavy lifting on the disinflation and the goods prices. The next wave is going to see and some of the services do the work if we want to see disinflation go down in a straight line.
That's why minutes this afternoon are going to be so interesting.
2 o'clock, minutes from the last Fed meeting. I want to bring in senior markets commentator with his take this morning, Mike Santoli, as we've seen some pronounced weakness here in the markets, and we're trying to figure out, is this the start of something bigger?
Well, clearly everything bigger starts like this, but we don't know if this is necessarily going to stay that way. It does feel as if we need to have maybe a little more of a scare to really settle things down. But the market has been navigating the exact narrative shift we've been describing from a position of being very overbought in August, having sentiment be very excessive, reaching a new valuation high for this cycle. So all those things are being digested at the same time. We're going from slow, steady, comfortable slowdown in the economy where yields have peaked and the Fed is just about done to possible reacceleration where it's a higher for longer rate structure and maybe the Fed has to stay on alert for a while. So all that in the mix, 3 to 4% down from the highs in the S&P 500 is really pretty modest at this point. You still do have the seasonal headwinds that are going to be an issue. And I do think, too, we have to be careful about buying into whatever the latest version of where the economy is going. Because, you're talking about, are we going to have enough on help on inflation by the first quarter to actually be thinking about the Fed cutting? Well, I don't know, 5 months ago was March when we thought we were in a credit crunch, a deflationary spiral, and the recession was here, and the Fed was absolutely done. Okay, 5 months from now, we're a lot
Okay.
the backdrop. So I do think that the market is in this controlled pullback for now. Probably have to wait for it to get more oversold in the short term for buyers to feel clever after you break the 50-day average. After you've lost that, hey, nothing can get this market down momentum psychology.
That's why I think that in the minutes today, what will be most interesting to look for in terms of commentary and discussion, if you're hoping for a more dovish view, if you want the market to rally, there's still this outstanding question of bank credit and what that's going to do to the economy. And the more they talk about that and they're worried about the lagged effect of that, the more dovish it is. The more they talk about lagged effect in general, that we've done a lot and we're still need to see the impact of that. I mean, these are things that traders are going to be looking for, I think, in the minutes, because what we get from Powell.
Okay, so we're bouncing here. 447 on SPY, S&P 500. We got 44.25 up to 44.50. Lots of calls here, and then we start to kick in around 44.65, 44.70. Some puts up there.
Discussion on a couple Fridays ago where he's like, 4,300, which was a pretty successful June test. Yes, 4,300. I mean, it's a few percent down from here. You want to get more stocks, looking like very few stocks above their 15, 20 day averages. You want to see the football ratios get more.
Okay, nice pop here.
A little bit more. So right now we're in this middle zone. Market's no longer looking frothy. It's no longer looking stretched to the upside in the short term. Look, the S&P got here in mid-June, really. So you're 2 months of kind of chopping around the same level. That's constructive. I just do think that with what's going on seasonally and internally.
Okay, there goes Apple. Apple ripping here.
Just on a tactical basis, if you're going to have people say, I'm going to buy them here, it's going to be because it looks like
Microsoft.
Mike, thanks for talking a little bit, Mike Santoli. Let's bring in Edward
Did we get a repeat of Monday?
Mona, where you see sort of August ending up and whether or not this so-called momentum is
Okay, S&P pushing back up to major gamma level, 4450.
That's what we're seeing thus far. In fact, I think thus far we are down about 3 to 4% on the S&P 500 since the end of July. But the Nasdaq and that Magnificent Seven are down a bit more, 5 to 6%. When we look at valuations, it's interesting to note that Nasdaq Magnificent Seven is still about 25, 27 times next year, but the rest, the 493, about 16 and a half times. So much more reasonable from a valuation perspective when we think about a broadening out from market participation. Now, what we would say is, when we look historically, on average, when the S&P runs 15% plus, we do tend to get about an 8% pullback from there. Now, there's a range around that, and perhaps some of the higher flyers will correct more, and some of the rest, the rest of the market may not correct as much. But generally speaking, we would expect, after such a strong run, some period of consolidation, some profit taking, and we think some caution is probably prudent here as we're heading into, of course, August and September, which are notoriously volatile months. But that being said, as we think about the underpinnings, the fundamentals of the market, a lot of it is still intact.
Apple.
As priced in better inflation trends, maybe a Fed that
All right, I'm looking to sell some more covered calls on Apple. Apple would like to sell some more covered calls. Bought them back on the dip. Sell some more. Still consolidating. This is day 9 on Apple. Day 9. Apple, day 9. Consolidation, basing, whatever you want to call it.
It does feel like earnings this year look like they're going to be flattish. We probably will start to see a bit of a rebound in Q4. For 2024, the estimates have ranged between 7 to 12%. So we do think something more in line with historical average, 7 to 10% earnings rebound after a flattish year is reasonable. And if you are looking at parts of the market that can experience some valuation expansion, you do have better, there's an opportunity for a return profile there that looks fairly reasonable. In terms of rate cuts, harder to handicap here. What's, I think, more credible is that markets are now pushing out rate cuts until about May of next year, so mid next year rather than early next year. We think that's a good and more comfortable place to be, as the Fed is very reluctant to declare mission accomplished on inflation. I think they do want to see a 2-handle at least before they start thinking.
Okay. Rejection again at 4450. Microsoft, Apple continues higher. Caterpillar looking for a higher.
Yeah, we think tech in the near term may take a breather, but not to say the rest of the market can't pick up some of the slack. So we think one of the things for 2024 certainly should be in your portfolio a broadening of market participation. Both, we think AI is still in the early phases of the local market, but full value here. If you get better opportunities, a good place still, but make sure you have the balance with not only small cap parts of the market, cyclical parts of the market, international could start to become more favorable then as well. And think about your bond portfolio. That opportunity to extend duration, we think still over the next 6 months could be really interesting here. You're locking in better yields, and you have that opportunity for price appreciation as well.
Well, we'll see what we get out of minutes today, obviously, and Jackson Hole not too long after that. Thanks. See you soon.
Thank you.
Okay, Roku we were looking at yesterday. No follow through. So bounce for 3 days. No follow through yet. Still probable that it could move higher, but also probable that it could move down to 50-day. 50-day is still bullish. So if it got there, you'd have a better entry. Tesla continuation. Tesla moving higher. Tesla going for +5. AMC. Coinbase. Coinbase has approval now to offer crypto futures. That news was out earlier. Netflix trying to turn. Yeah, Netflix saw a little fake out yesterday. It looked like it was going to move higher. What? What's wrong?
Look at the fear and greed index, 57 out of 100 equaling greed, and the crypto fear and greed index, 52 out of 100 equaling neutral.
This stream is sponsored by TickStrike. TickStrike.
All right, looking for a push higher.
Futures, forex, and stock instruments. Get a free trial at tickstrike.com.
The Nasdaq Golden Dragon China Index falls 1.3% to the lowest level in almost a month.
Okay, looking for a push higher. Looking for a move through 44.50.
Good morning. Thanks for having me.
So first, what drove these strong results? Double-digit comps. Not a lot of retailers and restaurants can put that up right now.
Well, Sarah, we saw really strong traffic in the quarter, continued momentum, what we've seen over recent quarters, and really reflective of the broad acceptance of Mediterranean. We have a significant white space opportunity in front of us as we create and define the next, what we believe to be the large-scale cultural cuisine category with Mediterranean, the unique cuisine we're tasting out today.
So I think the question, and maybe this is what's behind some of the weaknesses, with the first half so strong, I think sales rising 23%. Why are you more cautious on the second half, predicting that those are going to moderate?
Yeah, well, we're mindful of all the headwinds that are building, facing our guests, whether that's the increase in gas prices recently, cost pressures on utility bills with the extreme heat we've seen across the country, student debt with repayment waiting in the wings, and you do have a Fed hawkish posture that's looking to...
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast.
Microsoft going.
Prime 5.851 million, with a range of -1 million to -3.7 million. Gasoline inventories forecast -1.1 million, and the prime -2.661 million. Distillate inventories forecast -0.5 million, and the prime -1.706 million. And crude cushing inventories prime.
All right, we're still dealing with 44.50.
Yesterday's US API crude oil stock change came in at -6.195 million.
Accessible to all of our guests, no matter what economic headwinds they're facing outside of their experience with us. Hey, Brett, I wonder how you think about the concept, the food concept, in the trajectory of restaurants and the history of restaurants sometimes being volatile trend.
Okay, S&P 44.50.
Say others that were as specific as Mediterranean. But we say this is a way of eating and living that's been around for 4,000 years or so. You know, this is food that is very diverse in its broad appeal. I mean, you think about we're operating in 24 states today. Operating in the cities and the suburbs and in small towns, and we've had the ability to both diversity as well as income. We see this over your history.
Okay, here is the weighting in the top 10 stocks in the S&P 500, as you can see. Apple is 7.58%. It's actually more than 13%, Cayman, more than 13. Okay, more than 14%. And Amazon is 3.11%. NVIDIA doesn't tell us, but it's 2.2%, I believe. Google, 2%. Tesla, 1.8%. Meta, 1.84%. Google Class A and Class C shares, that adds another 2%. Okay. Microsoft, Amazon. NVIDIA is 3%. I'm sorry, NVIDIA went up. NVIDIA. Okay, NVIDIA is 3%. Okay, index weight's 3%. Amazon's 3%. Number 5 is Google, 2%. Class A shares. Tesla, 1.88%. Meta. So you can do the math. All right, so that's like 25% of the weight of the S&P. 28% of the S&P. Okay, if those stocks are bouncing, that's why we want to keep an eye on them. Even though we've got resistance right in this area, 44.50, what would it take to push it over? Well, is it the chicken or the egg? Does Apple and Microsoft and Google, NVIDIA and Tesla all rally? If they do, it's going to be difficult unless everything else is dropping off markedly. So, and that's possible too. All right, let's go take a look. Let's go take a look at what do you want to look at? S&P equal weight index. See how that looks. At we were dropping below the 50-day markedly yesterday. Okay, now we're bouncing, but not markedly. Okay, so this is the S&P equal weight index. This removes the weight of those top weighted stocks. So the number of stocks trading above their 50-day is now at about 46%. 46% are above their 50-day. So this is fading more. CCI is down below minus 150. If these all three of these turn higher, that would be bullish for the markets. We're trading right at 44.50 right now. That's resistance support right in this area. 44.50 is resistance support. Okay, so we can't seem to get above this level. Apple, Microsoft both turned back down.
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast minus 2.5 million from the prior 5.
NVIDIA still chopping around, flat VWAP.
Minus 3.7 million. Gasoline inventories forecast minus 1.1 million from the prior minus 2.661 million. Distillate inventories forecast minus 0.5 million from the prior minus 1.706 million. And crude Cushing inventories prior 0.159 million. Bear in mind that yesterday's US API crude oil stock change came in at minus 6.195 million.
Rejecting at 44.50 gamma. Okay, either we get above it or we stay below it. The longer we stay below it, longer we stay below 44.50, the more possible we get down to 4,400. That said, I'm not seeing a whole lot of positioning for a big move downside. All right, energy still trying to bounce a bit more. S&P. Let's see. Puts, there's a lot more open interest down below. Tomorrow's puts, today's puts, tomorrow's puts, less so. What about Friday? Friday. Don't forget, make sure you're checking out the settlement dates or the settlement time, because we got Friday is morning and night expiration. Friday is morning. We have morning settled and PM settled. So make sure you pay attention to what you're buying.
Become a registered futures commission merchant. Basically, what that means is that Coinbase now has the ability to offer futures contracts on its platform. The expectation is that we could see those futures trading contracts tied to Bitcoin and Ether pretty soon, at least on Coinbase. It's been under pressure, the stock, over the past few months, stemming a lot from the regulatory scrutiny. The SEC sued Coinbase back in June, saying it was operating illegally because it failed to register as an exchange. Now, the stock you can see around 30% from its July highs, but it's still more than doubled, you can see on a year-to-date basis since the lows that we saw of 30% in 2023. Meanwhile, check out what's happening with Bitcoin prices, still trading in a fairly tight range, though it's gradually drifted lower from its midsummer highs. Currently just around the 29,000 mark, but still kind of well within that range, guys. So keep an eye on those Bitcoin prices. Remember, the vast majority of crypto-related trading revolves around those derivatives tied to the price of underlying assets like Bitcoin and Ether. Keep an eye on those prices as Coinbase moves to a new market. So,
Yeah. The run up into that, Don, part of the story there. Thank you, Don Chu. So just about an hour here into the trading day, and stocks are mixed. S&P's a little bit higher. Nasdaq still under pressure after Tuesday yesterday. Let's get to Pakistani. More on what's moving.
When we look at the direction, Target's really helping retail. That's a good sign. PGX is helping retail as well. Elsewhere, not even on the advanced decline line, not getting a lot of help from the old market leadership. A little bit of move up in the energy stocks. Bank stocks.
Tilray.
Crude oil inventories.
The KDE, that's the bank ETF. Tech still floundering around here trying to find a direction as well. So where are we right now? Why does it feel worse than it is? You know, we're only about 3% off of the recent highs. Maybe it's the fact that we're down 9 out of
Tilray's on the move. I noticed some block trades yesterday, just early. Noted block trades on Tilray yesterday. It wasn't anything really huge. It was like 50,000 shares a couple of times. Tilray is up a bit, 6%.
And that's the prevailing paradigm right now. The rising rates are really hurting things. The timing is poor of this kind of modest correction, even just the 3%. Why is the timing poor? Well, look where we're at. Earnings season is over, and we're in a bit of a news vacuum right here. The volume is seasonally light.
Okay, Tilray on the move.
Minus 5.96 million, minus 5.96 million. That's a draw on the forecast. And minus 2.5 million. Gasoline inventories minus 0.262 million, minus 0.262 million. That's a build on the forecast of minus 1.1 million. Distiller inventories 0.296 million, 0.296 million. A build on the forecast of minus 0.5 million. Crude Cushing inventories minus 0.837 million, minus 0.837 million.
We're going to be obsessing about Jackson Hole and what the Fed's going to do for the next week. We need to get past this. Let's get to September.
Inventories of crude in the U.S. Strategic Petroleum Reserve up 600,000 barrels to 348.35 million.
Jackson Hole obsession we're going to have for the next week or so.
I think also the market is struggling, Bob, to figure out whether good news on the economy is good news or bad news. Is it good news because it means we're not going into recession, soft landing, that's benign, it's good for earnings. Or is it bad news because it means the Fed's going to have more trouble fighting inflation and the first cut gets pushed out? And maybe they might even have to hike rates more. It feels like we waver every day
We do.
on that question.
We do. I personally am in the camp. The good news is good news. I think the fact that the retailer is strong and retail sales were strong, and I don't care if you put it on.
This stream is sponsored by To The Tick.
I think
Get free daily pivot points, Fibonacci, and market profile levels by signing up at tothetick.com.
I don't want it to overheat.
German cabinet approves cannabis draft law.
It's great if it doesn't keep inflation pressures rising,
That's the issue.
sticky.
That's
We
the
just
issue.
don't know if enough work is.
Wow, the population of Germany is 83 million. Canada, 38 million. Market cap of Tilray spiked 28 billion back in 2018 on Canadian legalization. Interesting. Tilray, just observation. I know some of you are trading this. Tilray pushing higher. Okay, S&P 500 still having difficulty at this 4450 area, trying to chip away at it. Either we get above it or we don't. If we don't get above it, then 4425 below is the next level. Below that's 4400. All right, we're back below VWAP now. VWAP starting to flatten out. S&P.
US crude inventories fell to the lowest since January, and Cushing inventories fell to the lowest since April last week.
No way to verify those claims about King, and that the Pentagon is still working to bring him home. And soccer star Lionel Messi propelled his new team from the bottom of the league into the cup final into Miami, defeating the Philadelphia Union last night 4-1 to advance to Saturday's championship. Messi has 9 goals in just 6 games with the team. Sometimes it pays to pay up for those superstars, Sarah. It would have been more surprising if he had not done that. Bertha, thank you. Bertha Coons. As we head to break, check out the biggest gainers right now on the S&P 500. Earnings helping Progressive and all the insurance stocks as well. Progressive saying it wrote down almost $6 billion worth of premiums in July. That was up 20% from a year ago. Target rising after the bottom line beat, top line debt lowered guidance by 4%, and TJX with 6% comp store sales. That was double what analysts were expecting. We'll have a straight with you right now.
athletics.com.
Big week for retailers, as you know, reporting this week. Target's Q2 earnings did beat expectations, but sales were short. The company also cutting its full-year sales and profit forecast. Earlier on the call this morning, Ryan Cornell addressed the consumer. Take a listen.
The divergence of sales trends between our frequency and discretionary categories is being driven by multiple factors that are affecting the U.S. consumer. These include the impact of inflation in frequency categories, food and beverage and essentials. Marking these categories result in a much higher portion of consumers' budget.
All right, Tilray continues to push higher. Tilray.
Spending on services like leisure travel, entertainment, and food away from
S&P flat VWAP, pulling right back below VWAP.
Finally, the rollback of government efforts to support consumers during the pandemic, including stimulus payments, enhanced child care,
Yes, yes.
and the suspension of student loan payments, presents an ongoing headwind that consumers continue to manage.
Acadia Pharmaceuticals doing well.
US Midwest stock of distillers fuel oil rose last week to its highest since February 2022.
I think you're right there. It is on the margin beat. That is a positive surprise. And at the open of the hour, Sarah touched on it really well. Expectations were pretty low. This is one of the first times we've seen full year EPS expectations going in below what they had previously guided. So people were already in the they have to guide down area. People were already in the comparable store sales are going to be weak. And so I think what you're seeing a little bit is it having already reflected some of those concerns. Over the last 3 months, Target's been down about 22% before today. The market's up, Walmart's up. So a lot of this was priced in already.
The US refinery runs at the highest level since January 2020, and we have posted the weekly EIA inventories report on the feed for all those interested.
About the pride issues, they didn't share that much. They can't, obviously, but said they could not isolate that factor for June because there were a lot of other pressures like consumer discretionary weakness and inflation, making food and beverage tickets higher. And the fact that July looks better than June and August looks better than June, how much of a relief is that when you look at Target and any potential brand damage or harm as a result of the boycott?
Acadia Pharmaceuticals following through.
I do think you could draw a little line and try to quantify this, right? May to June was 4 percentage points worse for comparable store sales. And those things you mentioned, food and beverage inflation or discretionary spending, they didn't change that much May to June. So I think that's the majority of it. And then in July, I think you're right. You see some of those customers coming back. It's harder to boycott a retailer because they can offer convenience, right? So for some people, Target is the easiest, best place to shop, and that makes it a little bit more difficult to have the passion to go and boycott something. You know, the more extreme version is Bud Light. Bud Light doesn't offer convenience, right? There's plenty of substitute products for Bud Light, and so on a brand, boycotts can be larger than we think than on a retailer. But if you take a step back, just comparable store sales, even if it has stabilized, you're still running at about negative 5%. That is a level, year-over-year level that we haven't seen since.
Okay, Acadia Pharmaceuticals following through.
Their margins, although they got better year-over-year and sequentially, they're about 5% EBIT margins. Even during the recession, they were 7%. So what you have here is you have almost a recessionary performance quarter without a big change in consumer spending, without almost to some degree the recession. So we remain a little concerned. We think some of this comparable store sales decline and some of the boycott impact actually sticks, and so that's why we're maintaining our neutral stance.
Overall, Bill, on the consumer, coming out of retail sales yesterday, I mean, there's this growing view that the consumer is taking real wage gains and moderating inflation and turning it into spending. I've seen some numbers looking at maybe 3 to 4% consumption for the quarter. Are you that aggressive?
So I'm not quite that aggressive, but I think the point that's impacted Target the most is the spending shifted.
Okay, up-down volume is 1-to-1. VWAP is flat. Expect narrow, range-bound price action.
The assortment of a lot of peers who maybe weren't allowed to be open the whole time. So they had a base level of sales that only exist in that type of environment. Obviously, even if consumer spending increases, we're not in that type of environment. So we think some of that that they just naturally give back over time. And we see it even with some of the most loyal customers. And they have a loyalty program called Circle, but they also have their Red Card, which is their credit card and debit card program. It offers 5% off at the store. It offers 2%
US exports of crude oil last week rose by the highest since August 2022.
24% of sales. It's down to right now 18.
Do you think they're getting credit though, Bill, for the improvement in profitability, the efficiency savings? They're not doing layoffs. They're trying to boost growth, and we really did see that come through this quarter. It's being overshadowed a little bit by the sales cadence, but margins, profitability, the fact that they continue to project that kind of improvement. Does that make it enticing at all?
It helps. It's still below ideal levels, but if you take the amount that they kind of beat expectations in the second quarter, their guidance, they still lowered it, right? So they are implying that the second half maybe was less than they originally expected because 2Q was better than expectations. So you did better, and now you're saying full year you're still going to do worse than you thought. So I wonder, gross margins were fine, but I wonder longer term when you have this rapid of a change in comparable store sales, if it doesn't turn into another excess inventory problem. I mean, you were planning for more. Target says that. But if those sales don't materialize or turn around, you begin to have excess inventory again in some categories, and then you go back to having to discount a little bit.
Curse of retail, I guess, Bill. It's difficult to keep that.
Tesla settling back to VWAP, looking for a bounce.
Chinese tech as the housing prices decline in that country. These deflation fears continue. We're going to go to Beijing for the latest after a short break.
Okay, S&P. If S&P gets above 4450, gets above, that would be significant. Okay, so either it does or it doesn't. I don't have any judgment calls here, but if it gets above 4450, that'd be a big deal. That would be a big deal. Mm-hmm. Okay, algo flow on Palantir is starting to move higher. See if that has any predictive value. Trading ticks, Palantir. Okay. Still consolidating day 5, day 6. Dropped down 6 days ago, went sideways above 15. Algo flow right now for Palantir is moving higher, higher highs, higher lows, while price is hanging out near 1550. Algo flow is moving higher. So that's something that may be interesting in the short term. Zero GEX for SPY is 0-day GEX for SPY is 447. Puts overhead 447. Calls right here at 442, 441, 442. Lots of calls down there with overhead resistance. Noted. All right, so are we going to do anything here or what?
A PBOC-backed paper says expectations on yuan FX rate are stable.
Surge in profit for the second quarter, but results still fell short of expectations. The tech giant said its cost-cutting measures began to pay off, with sales rising across the company's various businesses. China's largest retailer, JD.com, also in the red, despite a beat on the top and the bottom lines, reflecting concerns over a slowdown in the world's second-largest economy. The company said its results were driven by a focus on pushing lower-priced products to attract customers. Man, there's so much going on over there. It's hard to keep track.
Yeah, the Chinese currency is at a 9-month low, weakest since November. That's always signal of confidence since it's highly managed. And new data out of China shows home prices fell in July, adding to those growing concerns around the country's real estate sector. Despite this and the looming threat of default, embattled Chinese property developer Country Garden said it is continuing construction. As Bloomberg reports, the fallout could be far-reaching, with teams like BlackRock to Allianz potentially facing bond exposure. Our Eunice Yoon has been digging into Country
This
Garden.
stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments. Get a free trial at tickstrike.com.
Unfinished projects here in Beijing, and there were workmen on the property. Salespeople were there trying to convince customers that even though the company does face default, that it will make good on its promise to deliver homes. Even so, the real estate industry continued to deteriorate. In fact, today we had data out that showed home prices in July fell nationally by the most this year.
Caterpillar, flat VWAP. A lot of flat VWAP action today. NASDAQ 100 is actually gaining a few more. NASDAQ 100.
Has been doing some analysis there and found that direct exposure was small. Capital Economics says that foreign investors have already pulled back from the Chinese property sector over the past few years and a run.
Datadog trying to break out. Datadog trying to break out.
Since you guys have mentioned BlackRock or Allianz potentially having some exposure there. Still, of course, there are worries that there could be a spillover effect in the financial sector, and then the overall
Datadog's trying to break out of its recent down move down. KDP, Old Dominion Freight, Ross Stores, Lulu, Pinduoduo.
PBOC-backed financial news, yuan decline pressure is to ease in the second half.
Yeah, that's right. I think that the way you describe it is accurate, that this is a piecemeal approach. It looks as though the authorities are trying to figure out what they can do.
PayPal still at the lows. PayPal. PepsiCo. Okay. DocuSign. Okta. Just going through the list of top 100 NASDAQ stocks. The top 10, top 20. CrowdStrike, Costco, T-Mobile. T-Mobile been trending. T-Mobile's been trending. Let's see, T-Mobile. Let me just check out T-Mobile here. TMUS, T-Mobile. Back into a range, trying to get back to the 200-day T-Mobile. Marriott. Let's see what Marriott looks like. That had been at 52-week highs. Marriott looking good. Trending. Marriott's still good. That looks pretty good. Flag today off the 9 EMA. Trending 921.50. Marriott. Looking at Marriott here. Marriott's been trending. 921.50 turned up. continues higher. The weekly time frame on Marriott, a bit extended, so a consolidation here makes sense. Okay, but it does look good. Marriott, CTSH. All right, CTSH, CTSH. PACCAR has been active lately. PACCAR, CrowdStrike. Okay, CrowdStrike. Applied Materials. Okay, Applied Materials has earnings this week, right? I believe. Dollar Tree, turning the corner. Ross Stores trying to break out. Oh, ROST. Okay, what's Target doing today? Target, double bottom. Good risk reward. If it can manage to continue this turn, it's been consolidating for 10 weeks. It made another test of that double bottom, had earnings out this morning. They beat on earnings, but there was a lot of negative comments from analysts, even from management. Stochastics oversold. So if this does follow through, what I'm looking for on Target is a move above 137. Could be starting a trend above 137. Okay, it needs to get above 137 though. Volume is above average. Volume high today. Target, S&P, back to the S&P. Keeps trying to bust through 4450. That's a major level. Let's go out to the 60-minute. Okay, you can see what it looks like on the 60-minute. And let's take a look at our stock charts. 60-minute stock charts, a little bit more clear. Okay, delineation. As the 20 EMA continues to drop on both the 60-minute, the green line, and the daily, the red line, these two are telling you the trend is down. Look for rejection on pops. Some of you are looking for 4,400. I believe Mikey is looking for 4,400. 4,431 was the low this morning.
So just a reminder that you can master the secret language of risk on trading with our very own Tony. It's 11 a.m.
And then ultimately forecasting 3 cuts by year end. Over at Mizuho, the economists write a wide-ranging policy debate is likely to be detailed in the minutes of the July FOMC meeting, emphasizing how the committee is conflicted on the way forward. At Citi, they say minutes may reveal the leading edge of a debate about the appropriateness of keeping policy rates elevated, even as job growth and inflation have recently cooled. All that's true. That's one set of problems. They're good arguments for the Doves. They want to hold or even cut rates, yet the Hawks have gotten more support of recent economic data.
Okay, so the trend is down. Trend is down until it's not. Okay, so that should be obvious. We remain in a flat VWAP. Remain in a flat VWAP setup. We need to get above 4450. And then 4470 is another level.
Sarah, you have to attach a word to your sentence now. New world. Do you mean nominal tightening or do you mean real tightening? Right? Because nominal tightening is raising rates. I think that's what you were talking about. But there's also this idea of real tightening, which as inflation comes down, if they keep the nominal rate the same, the Fed on a real basis gets tighter. I think there's some support for nominal tightening. I think there's not necessarily, nominal cutting. I don't think there's support, by the way, for real cutting.
Yeah, I was going nominal, just old school interest rate hikes. But the real tighter policy feels like everybody's in favor of keeping rates elevated for a while.
All right, about 60% green now on the NASDAQ 100, so that's looking better for the bulls. Hey, you're stealing my comment, Lehman. Lulu's still running here?
A quick programming note as we close out the hour. A few hours away from Cisco results tonight. Chairman and CEO Chuck Robbins is going to join us to break down those.
TJ Maxx. All right, TJ Maxx looks good. Okay, TJ. I was saying this past weekend, I have been shopping for the boy, the son, khaki pants and khaki shorts, chino style, without the cargo look, a chino look for his private school. Yeah, TJ Maxx looks really good. Let me take a look at the earnings, Corey. TJX. Okay, TJ Maxx maximizing buying interest today following buoyant Q2 results and raised fiscal 24 guidance. Okay. I don't see any upgrades. Do we have any upgrades here on TJ Maxx this morning? Don't see any upgrades. So that's okay, because as a stock starts to move higher, you have analysts look at a chart or a company. They start to exercise their upgrades, maybe adjusting price targets. That's a tailwind when they'll start to add in. So I'm not sure how many are bullish already on TJ Maxx. I think there's a few already. So TJ Maxx looks pretty good. Nice gap up. It could fade. It's a breakout of a 3-week range, a 3-week tight pattern. TJ Maxx. Okay. Looks good. Let's see. TJ Maxx, TJX.
Good Wednesday morning. I'm Sarah Eisen with Carl Quintanilla, live from the floor of the New York Stock Exchange. Panera Bread founder and former CEO, early Cava investor Ron Shaich weighing in on those results and his restaurant fund's performance.
National Economic Council Deputy Director Bharat Ramamurthy joins us as the landmark Inflation Reduction Act turns 1 today.
And later, former Snack CEO Steve Sadoff as Target and TJX report earnings, what it says about the consumer.
Meantime, markets here trying to get back some of what was lost on.
So anybody know what Manchin's comments are lately about the Inflation Reduction Act? Not that they need to post it in the social channel if you got any comments or any observations. I haven't watched it lately. Okay, let me see.
And the debate continues about whether the economy is too hot to get rid of inflation for the Fed. Just this morning, we got some housing numbers that were better than expected. Industrial production a little better than expected after yesterday's retail sales.
Right. A lot of jokes about the Magnificent 1 or 2 as opposed to Magnificent 7. Although Cisco tonight could give us a view at least of enterprise spend and whether or not that gets another cake along with the consumer.
But doesn't get a magnificent title because it's not an AI, are not thought to be. Top of the tape right this morning, though, with Target results and the read-through on the consumer. The stock is higher despite a somewhat gloomy outlook. The company CFO, Michael Fidelki, telling me this morning he's watching the consumer discretionary category slowness. He said it's top of mind. He said we're also watchful of student loan impact. Remember, that's coming in the fall. More students will have to pay off their loans. So we have a position of caution. That's how we characterize the guidance. Those results coming ahead of Walmart, which of course reports tomorrow. CNBC senior retail reporter Courtney Reagan joins us with the sentiment on these two stocks. Pretty far apart, Courtney.
Very, very, very far apart. Yeah, I think going into this, Target had just hit a 52-week low, down about 20% over 3 months, and Walmart had been up 5% over that same 3-month period. They're often, of course, are compared, but we know that their businesses are very different, largely because of mix, which seems to matter now more than ever before, with Walmart over-indexing in those categories that Target calls frequency categories, the food and beverage, some of those essential categories with over half, 50%, 56% or so of sales. Well, Target, of course, really pushes more into those discretionary categories that are considerably weaker, I think, than Target had expected. They talked about the weakness last quarter. Not only did it continue this quarter, but they're forecasting it to continue going forward, with taking down their guidance really sharply for both sales and for profit for the rest of the year. Even with a 41-cent beat on the profit this quarter, they're taking down the full year profit forecast by another $1.
Yeah, Court, the inventory numbers were interesting. We mentioned down 17, but down 25 in discretionary. It does seem like even though demand is a little harder to come by, they are managing to be somewhat disciplined in that environment.
Yeah, and I think it's really important, of course, as always, when we're looking at numbers like this, because they all have to think about the comparisons. And remember, at this time last year, Target had placed all of these orders for these goods that were in such high demand by many of us consumers during the pandemic. And because of the supply chain snafus, by the time they sort of got in stock, we had moved on.
TJ Maxx.
We were into other things. So Target
Breakout.
all of these items, but then they had to really sharply discount in order to move them. So it helped to juice up those sales. Yes, inventory was higher and then profit margin was lower. So that's that quarter comparable that you're looking at for this quarter now, which makes those numbers look even sharper. Just as a point of comparison, I think it's important to look in the context of what was really going on then versus now.
Yeah, I mean, it's a good point. Courtney, what do we know about market share for Target? Because the story has been they are in categories that consumers are not wanting right now. Home, apparel, hard lines like electronics. And that's what's hurt Target relative to Walmart. But what's happening with overall share?
Yeah, I think that's a really good question, and I don't think that we know for sure, because obviously Walmart, too, in the past quarter, we'll hear from them tomorrow for more detail, also talked about weakness in those discretionary categories. So I'm not totally sure that they're picking it up. However, we heard from TJX today, and look at those numbers. Their comps are up 6%. The street was only expecting them to be up 3%. So when it comes to apparel, maybe the Target shopper that was previously going to Target is now moving to TJX. But I also think we all know that we're spending more on travel these days, on these other discretionary type of services or other discretionary.
Target shoppers are moving to TGX. Yeah, I could see that. Although I really don't look to buy men's clothes at Target. I would rather go to TJ Maxx and find some nice markdowns on Ralph Lauren or Tommy Hilfiger. Makes more sense to me.
It's a Taylor Swift economy, Courtney. That's what we're spending on. That and European vacation and not home goods.
Yeah, exactly. All of the planes are totally packed. The airports are totally packed. Hotels are packed. Prices are higher because of Beyonce and Taylor Swift tickets. It does sound that way.
Sarah wanted to add Barbie merch as well.
Oh, yeah, there you go. Yeah, we're both wearing pink today, so I guess
Thank you. For some further insight into the consumer, let's bring in former Saks chairman and CEO Steve Sadoff. Steve, it's so good to have you back. I guess I'm wondering, when you meet someone who has questions about the consumer, what do you say to them? You grab them by the shoulders. What's the overriding dynamic right now that describes the U.S. consumer?
Okay, TJ Maxx looking good.
Really well. The consumer's slowing right now. If you look at the beginning of this year, the consumer overall growth was in the 8-9% range. Today, it's in the 3% range. We looked at the Commerce Department numbers yesterday, and everybody was very excited about the improvement from June. But if you look at it versus a year ago, it was a 3% growth.
TJ Maxx weekly after this big base or cup with handle, taking off to the upside.
So we feel good about it, but you have a slowing consumer, and you have a consumer who is not buying as much in goods as they are in experiences. But Carl, one of the things we got to look at, and Courtney was right in looking at, let's look at what happened a year ago. But we also have to look at
Okay, back to 4450 S&P.
You're now in a period of
There's a reluctance for. Now there goes TJ Maxx is going here. TJ Maxx.
the business is dramatically better than pre-pandemic, but on a year ago basis, it doesn't look as good.
TJ Maxx.
People moving away from those categories. You're starting to see the experiences are looking great, but if you look at travel and some of these other categories versus pre-pandemic, they still don't look that good. So there's a lot of room to run. But clearly, on a year ago comparison, experiences, travel are all the winners. You're starting to see a resurgence of apparel. You're starting to see electronics come back. Remember, electronics were big winners early in the pandemic. So I think this is a bit of a reversion to the mean. And you're
All right, so they're looking for 15% upside on earnings from 311 to 358, and then 396 in 2025. So guidance from management is very bullish.
That's a great point. Normally in retail, we look at 1 or 2 year stacks. It's probably not enough given the bullwhip effect that we've seen from the pandemic. I do wonder, it's 131 days to Christmas. If it's too early to start thinking about how that season's shaping up.
Well, I think that it's going to probably be a cautious holiday season. Think about what we're seeing in back to school. The back to school numbers look healthy, look 3-4% range, but the forecast coming out of Target was cautious, and that's because everybody is concerned about a slowing consumer. I would be very careful. Inventories are all well controlled right now. A year ago, we had an inventory problem. Right now, we're in a situation where inventories are under control, as are the supply chain costs. I would expect it to be more normalized promotions during the holidays, not over-exuberant promotions, unless the consumer falls apart, which it clearly has not yet fallen apart. And the categories that are performing well right now, which tend to still be the experiences, but I would expect during the holiday season, electronics, apparel, the categories that came out really well during July, and you saw that in the MasterCard Spending Pulse numbers that just came out, apparel, electronics, grocery, travel, entertainment, doing very well. I'd expect them to continue to do well during the holiday season. But I think that caution is an important word during this period of time. It's easy to start feeling exuberant, but there are headwinds out there, and whether it's consumer debt that is starting to increase, their savings rate is coming down. We don't have the, others have mentioned whether it's the student loans, the lack of government support programs. All of these are things that are weighing on giving you a very, very aggressive forecast. The word I would use is value. Look at TJX today. They have great numbers. I would expect you to.
Okay, TJ Maxx going. TJX going.
I look at that for the holiday season.
That is definitely actionable from a stock perspective. Steve, good insight. Talk soon. Thanks for the help today. Steve Sadoff, former Saks CEO. Coming up next, is the dip in the S&P this month just a blip or the start of something bigger?
Roku expands its free ad-supported streaming TV partnership with Comcast, NBC Universal. Okay, that was yesterday. Roku said that is expanding its free ad-supported streaming TV partnership with Comcast, NBC Universal, with the addition of new channels from the latter's global distribution library. Roku's channel has started featuring new content from NBC Universal and more channels of varying genres that will be added later this year, according to the statement. No financial terms were disclosed. So let me go take another look at Roku, see if there's any feedback from that price-wise. Yeah, Roku looks like buyers stepping up. Okay, Roku gets back above yesterday's high at 84.44. That would be an indicative of institutions if volume picks up, indicative of institutions buying. So I'll be watching Roku. There's no hurry. It's in a bullish trend. This is the third higher low since it moved above the 50-day back in late May, early June. So if you look at Roku on the weekly time frame, you can see what are the odds on moving higher versus dropping back into the range or lower. So I would think that dropping back into the range is possible. I just looking at this deal that they just signed with Comcast, NBC Universal. All right, so it could drop back into the range. The 10 EMA is starting to turn up, and if I go to a shorter time frame, it's a little easier to see. Okay, so higher highs, higher lows on the 10 EMA, coming back to the 10 EMA, also coming back to the 21-day. Okay, so this is all indicative of price action that I would look for a bounce on. So let's see what happens in the next couple of days. There's no hurry. I wouldn't think that there's any hurry here to jump into Roku. But if it starts to move and we break above 84.44 or 84.50, that would be good. Back to the S&P, hearing some bearish flow. That clucking sound, the opposite of woodpecker. That clucking sound is bearish flow. We got a flat VWAP. TJ Maxx looks good.
Welcome back. Let's dig into the markets a bit more with some experts who have very different expectations about where things go from here. Paul Christopher from Wells Fargo Investment Institute predicting at least one.
That guy with Bitcoin, Stefan Thomas. Maybe he needs to get himself a Russian hacker to hack his Bitcoin hard drive. Okay, TJ Maxx looking for higher highs, higher lows.
Yeah, we think you're going to see the Fed still have enough concern about inflation, maybe not at the headline level, but core is still very sticky. Food and fuel prices still rising, housing prices going up, rents again sticky. That's going to keep the Fed engaged. Any of these meetings is potentially live between now and the end of the year.
Yeah, inflation, the Fed's focus. What we don't want to see is deflation. We don't want to see deflation like we had in 1929, 1930. That led to the Great Depression. We don't want to see deflation. That's what China's dealing with right now. According to experts, China's dealing with deflation, which would spill over into the U.S., I would imagine.
Tony, the Doves would counter with shelters coming online. It looks like used cars is not a head fake, given some of the alternative data that continues to come in, and there's deflation on that front. What do you think?
Well, we would agree with Paul that the Fed probably will hike. It's going to be very, very careful to not put a stake in the heart of this inflation problem. But when you look at the data, you look at the CPI numbers that we had earlier this month, PCE coming out on August 31st, like all that, it's a very strongly disinflationary economy. Notwithstanding the strength of the economy is disinflationary. The one area of the numbers that are holding up inflation at 0.2, in fact, is shelter. And shelter lags by around 14 months. So if you go back and you look at the Case-Shiller, what you see is that we should have around 6 months coming up of very weak disinflationary housing data that's going to push the month-over-month core numbers
and supercore numbers really quite low. And so I think that the Fed is going to stop after the next hike. And then when you look at the longer end of the yield curve, what we see is the downgrade, the situation with Japan, the refunding of the Treasury account, all in the short term, really pressuring the yields. But when you go out a little further than that, it would appear to us that yields should be down maybe closer to 375 or so. And that makes bonds look pretty attractive when you consider where the yield could go coupled with the carrier.
What does all that add up to for equities then, Tony?
Well, I think what it adds up to for equities is you have to be very careful and very selective. The leadership in the equity market really has been lost. Those big mega cap tech names are at very extended levels. When you look at multiples, excluding those top 7 or 8 securities, really around 14.5 or 15 forward-looking earnings over the next 4 quarters. And that means that if you're selective and you're looking at the value areas of the market, and the quality areas of the market, such as consumer discretionary, diversified financials, travel, casual dining, all the service areas of the economy that have good quality names, there are some good buying opportunities there.
Hey, finally, Paul, one thing we're not really addressing is employment, and I'm wondering how tight you would expect labor to stay if, in fact, you remain with the hawkish Fed.
Yeah, the labor market has some structural tightness to it in the sense that 55 and olders are not coming back to the workforce. But if you look at the cyclical, or let's just say the month to month, what you see is that the labor force participation in that 24 to 54-year-old category has been strong enough lately that supply and demand are roughly balanced, and we're beginning to see hours start to come off. Firms don't need to work existing employees.
Okay, we're back below VWAP again.
Means is that even if wage rates are still rising at about 4% annualized, the number of hours is declining, so that total take-home labor income is softening quite a bit. We think that contributes to an overall weak situation for consumer finances going into next year. We don't see how that pulls out of that nosedive pulls out in time for a soft landing.
Yeah. The work week is definitely becoming something we watch every Jobs Friday. We'll continue to, including revisions. Paul, Tony, good debate. Thanks, guys.
Thank you.
Cava off its highs of the morning as the restaurant chain swings from a loss to a profit in its first report since going public. More on those results when we come back.
And then later this hour, Intel scrapping its planned acquisition of Tower. The antitrust concerns behind that deal and some of the termination fees would squawk when the street comes back.
Okay, we're just sitting here chopping around. What time is it? 11:20.
Placed earlier in the year, we're rolling back over, taking out 36, the key area. The pivot zone associated with that range, Don was just talking about the upper extreme being in the $40 level, lower extreme here down around 30, we'll call it. And even as I take a step back here, look what's going on with the RSI, taking out recent lows from earlier this spring. So possibly price has a little bit of room to go to the downside here, below the 50, below the 200. I see what Don's talking about in terms of potential just to remain in this range. It hasn't seen a lot of conviction in terms of a breakout, but this is like a pop bottle that's been shaken up at this point. At some point, it's going to break out, and the longer-term trend of the downside, it still feels like the bears are in charge here, Nicole.
Oh, okay. I like some of those analogies there. Don, your thoughts?
No, I'm all right with that. You know what? I just need that little pop back to the upside before the more significant drop. So again, I'm looking at that much shorter term horizon. However, I actually agree in respect to that longer term chart in there, where it's not exactly like a feel good stock. It's one of the reasons I'm coming in there with defined risk on this particular bullish position.
Okay, got it. And so all you need is a little pop and then it can drop or do whatever the bears is, as Ben said, bears are in charge. When we turn around to the home builders, I mean, we've seen the group running up to new 52-week highs. I mean, left a lot of people scratching their heads, but the home builder index is up 38%. Don, what are you looking at here?
Yeah, the supply-demand dynamic right now, just for new homes, is fairly dramatic, and that ultimately being there's just incredible demand and still limited supply. Not a lot of people are out there selling their homes. There's very limited inventory in the United States right now for real estate, which has probably propped up the narrative, if you will, specifically to the home builders. However, all of that being said, I am absolutely taking a bearish position in the XHP. Now, here's my disclaimer. I have swung for the fences several times this year in XHP and completely struck out on the bearish side. The third time is going to be the charm here. I look back through the trades and I'm like, man, I missed this one. But I like it right now. And I like it because the XHP is kind of flattened out in and around this 85 handle. And it's not just about the chart. It's about headwinds to the overall economy, right? It's headwinds that are going on inside of China. As I was talking about, like a not so feel good story. This is not a feel good story right now. I mean, do you really want to be long home builders in the midst of rising rates? And again, I understand the supply demand dynamic. Nevertheless, once again, I'm actually going to take that swing for the fences here in a bearish trade in the XHP. I'm going all the way out to the December 15th expiration. Give myself plenty of time.
Okay.
I'm going to be buying the 82 puts, selling the 77 puts. It's done for $1.50 debit. So $5 wide spread. As I said, I'm swinging for the fences, looking for a big bearish play here in the, not so near term. These 15 expirations got plenty of time.
Look, and you may have seasonality on your side for a bearish trade when it comes to home builders. You still have a high rate or rising rate environment. And, thank you for being so frank on when it didn't work out. But hey, I mean, my friend Ted Weisberg always says a broken clock is right twice a day. You'll get there, right? You get there. Even a broken clock is right twice a day. Ben, what do you think about the chart?
Well, I think that unfortunately we're still in a bit of a bull trend, so I don't subscribe to the bearish narrative that Don's
Flat
putting out there,
VWAP
but I
continues.
do like the idea that he's giving himself some time here, because if we do break down below 82, we could see some energy, that's for sure. But I want to begin first and foremost with the rally. We've seen the bullish pattern, high conviction on the left side of your screen, sideways consolidation throughout the bulk of after we rallied up to 85. We found value, and we've been consolidating again around this $84 level. So you see the conviction. We're talking about into the beginning of July, up into the middle of last month, and then you can see a little bit more rotational and overlapping horizontal type pattern playing out. But I also want to direct your attention to the left side of your screen here, because even throughout that run up, we saw, from 77 up to, we'll call it 83. You can see that this pattern played out, high conviction, sideways consolidation, multiple times, 78, 79, 50, 81. Each one of these times you can see high conviction vertical phase transitioning into a horizontal phase. And this is what I look for, because it's wash, rinse, repeat when you're talking price activity, and it helps provide a lot of rhyme and reason. In this instance, value is moving higher. We've got a trend environment to the upside, but taking a look here at the longer term, you're going to see that's just a small portion. Here it is, that rally up that we looked at, sideways consolidation around 84. Small portion of the run-up we've been seeing, 62, 69,
German
79.
Chancellor Scholz says the German economy is going through challenging times.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow in futures, forex, and stock instruments.
German Chancellor Scholz says energy prices still need to come down further.
All right, just sitting here watching a very lethargic trading day like yesterday. Remember, flat VWAP doesn't give you much to go on.
side in the S&Ps and some follow through sell side activity expressly in the Magnificent Seven.
All right, thank you. Great big three today. We had General Motors, the Home Builders, and Starbucks. Always great. Love having you both on. Thank you very much. You make it very good and special. Don Kaufman and Ben Lichtenstein. Thank you. All right, coming up next.
TJ Maxx still going?
Another price cut for the cars in China. We want to hear more about that. Kevin Green will take a closer look at that and some of the other companies and how they're feeling the weight of some of China's disappointing economic data that we've been seeing. It's all coming up next.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then watch list. When the default list appears, click the name box, then create watch list. Enter a watch list name. To begin adding securities, enter a ticker symbol in the symbol box, then select enter. Continue adding all the symbols you want in your watch list, then select save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. Next tab, select the list icon and then add to watch list. From the scan tab, right-click a security and then add to watch list. That's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox.
All right, Cormac, I got this for you here.
Click on the pop-up to subscribe now.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Welcome back to Trading 360. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. Quick look here at the markets. You can see the NASDAQ has turned into the red now. We've had a lot of back and forth action. The S&P is holding on to 3 points. The Dow's up 86 points. Worth noting the S&P and NASDAQ third down week and likely to snap a 5-month winning streak. As far as
All right, so we're pushing a bit lower.
are leading the way. Those are some up arrows, down arrows, and you have communication services, discretionary, healthcare under pressure. Now for developing stories this morning, I'd like to bring in Kevin Green, senior markets correspondent, to talk about some of the effects out of China. We have so much going on, so many stories out of China in the last few weeks. So some of the worst data has come out. We've gotten news on slashing prices for Tesla. Tell us about that, and I also want to later, I'll ask you about some of the other stocks too.
Yeah, and Nicole, this divergence that we are seeing from the economic data in China compared to what we are seeing here in the United States, it's remarkable to say the least. Actually, this just broke right now. The GDP Now model for the Atlanta Fed actually increased their expectations for GDP to 5.8%. That's up from 5.0% that they actually just announced or estimated yesterday because of the housing numbers here. So that type of difference compared to what we are seeing in China, where we are starting to see slower than expected retail growth, is impacting companies like Tesla. We are seeing Tesla cutting their prices once again on the Model S by 6.7% and the Model X by 6.9%. Now this is after
Tesla been fading.
China's Passenger Car Association, where they saw a 31% decline in sales from China-made Teslas from
Microsoft, Apple,
July. So we actually just saw the first
Amazon, Nvidia, pretty much flat over the last couple hours. All right. Tesla latest pricing news. Cheaper versions of Model S were produced. TJ Maxx having a good day. TJ still trending, up $4 on the day, 4.75%. TJ Maxx looking good. Netflix off 3. Netflix looked like it was going to break higher yesterday. It gave a fake out and reversed. We had a good day on Monday for the FANG stocks. Today, just a repeat of yesterday so far. So far, we got a repeat of yesterday. Here's the New York FANG index. Okay, so descending higher, descending lows, descending highs, lower high, lower low. Coming back to 236 potentially after more than 100%. I don't know what the bulls are complaining about. You know, if we get back 5 to 10% of this, that wouldn't be so bad, would it? Stochastic still embedded down here below 20. If this comes unwound and it starts to pop, that'd be a great setup off of this level. Could be some people would look at this as a head and shoulders top. Left shoulder over here at 7,900. Ahead at 82.93. Sort of a right shoulder over there. Neckline along this level, 7,300. Let me turn this off. Price labels, that's just distracting. That's a lot better. Okay, a lot better there. Cool. 236 would be a move back to 7,300 after a 100% gain. The November low. Okay, we're fading a bit more. Lunchtime. $11.39. TJ Maxx still pushing higher. All right, let me go take a look at rotation in the markets. Rotation, let's see what the market carpet looks like. All right, decidedly better than yesterday. Yesterday, we only had a few stocks that were green on the day. Eli Lilly and NVIDIA. Roku was a bit higher, but this looks completely different than yesterday. Okay, just an FYI. I know some of you seem to have a bearish bias today. I keep seeing a flat VWAP, so I'm expecting price action to stay between these highs and lows until it doesn't. Okay, so that's the low of the day. High of the day, right around 44.50. Tagging 44.50. Looks like a doji. TJ Maxx still pushing higher. Coinbase starting to turn. JP Morgan moving higher. Off the low, JP Morgan. What is the U.S. Steel doing? U.S. Steel, still nothing. No more, no new offers. All right, fading from that 30.90 level this morning. U.S. Steel. Okay. Vornado, real estate higher. VFS is moving higher. VFS moving higher. Energy flat along VWAP right now. Flat VWAP. 1-to-1. Doji Day. 1-to-1 up down volume. Flat VWAP. Rig just off the high today. Rig looking for that to break above 9. Rig, what's Tilray doing? Tilray was ticking higher earlier. Tilray off the highs of the session. Let's see. Meta. Somebody just bought 222,500 shares of Meta at $297.45. Let me take a look at Meta. Somebody just bought 225,500 shares at $297.45. Okay. We're trading right at that level right now. Moving lower, that's possibly a short. Okay, VIX is moving higher. VIX moving higher. S&P 500. Still flat VWAP. Nothing says this can't turn down and price start to make bear flags. So that's what I'd be looking for, bear flags at this point. Slow moving train. Most stocks are sideways, no follow through. Johnson & Johnson with 197,000 trading at 173.55. J&J. Okay. Apple somebody just bought 205,000 at 177.77. Okay, that looks like a short. That was at the offer. VIX moving higher.
expand its net income margin on a forward basis. And I think one of the hangups has been that Salesforce has essentially made a lot of acquisitions in the past, which they're trying to manifest into, of course, better earnings on a forward basis.
All right. Thank you for all of that. I mean, basically, I mean, I saw a lot of quality comments in there. You know, a lot of good news. I know you had the price target cut, but as you noted, a lot of good things that are happening for this company. In the meantime, how would you go about an example trade now? It's already a winner, obviously. Year to date, hit a recent high and has had a recent pullback. Your thoughts on an example trade?
Yeah, so if you notice, Nicole, in the last few weeks or so, we're changing strategies. We're actually selling premium because I think the market is in a correction. You have to be mindful of that. If you look at Salesforce, it peaked around 240 not too long ago in late July. So it's down about 13% from those highs. So what we can do is actually look at the stock recently. It's just been in a sort of a tight trading range. 100 moving average is where the stock price is sitting at.
VIX starting to top out, looks like.
Sell a $200 September cash secured put. You can sell it for about $5 a share or $500 a contract. So by doing this, you're essentially creating a situation where
Low tick alert -800.
Okay, we're moving. Let's see, S&P back down to the low.
So if you're willing to essentially put out some capital to put this trade on, your yield to strike is about 2.5% in 30 days. But you do have flexibility of about 7% to the downside.
U.S. equities
before your risk of loss.
trade as the weight for the minute. Out on volume, 20% below the 30-day average at this time of day, while the tech-heavy Nasdaq 100 is down.
More than 10% since that deal announcement to acquire Freight. I want to take a closer look at this deal and preview also the quarterly earnings that are due for Tapestry next on the trade.
Nice job, Mondo.
Traders tell us how to make things even better. Listen. Because platforms this innovative are just made for traders. They're made by them. Thinkorswim Trading from TD Ameritrade.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
That's pretty funny. Vornado. NVIDIA at the low of the day, close to the low of the day, NVIDIA. TJ Maxx, a little profit taking at the high. Merck at the highs. All right, it's another one of those days. Yesterday was pretty flat. Most stocks are flat to higher. Looking at what is working here, looks like industrials are up quite a bit. General Electric. Lockheed Martin. It's okay. ADP. Let's see. CTAS, Waste Management. Okay, I have to take a couple minute break. I'll be right back. Enjoy the woodpecker.
Yeah, so when it comes to keeping all the brands, they kind of dodged the question in the mergers and acquisition call a couple of days ago. They didn't really talk about it. They were asked, were you thinking about divesting some of the brands under the the company, the new company, and they they kind of avoided the question. So I'll be interested to see if they do kind of maybe potentially sell off some of the underperforming brands, maybe Jimmy Choo. Or some of the the shoe brands that they have acquired over the recent years. So it'll be interesting. And then as in terms of tomorrow, I don't expect much. Capri didn't have a very good earnings call. Michael Kors, their biggest brand, didn't have they had a down quarter, and so it'll be interesting to see how Tapestry performs in this earnings call.
Yeah. So overall, so you're not really expecting much from this call tomorrow. And Tapestry has names like Kate Spade, Stuart Weitzman, Coach, for example. Tell me your thoughts. What do you expect tomorrow, David?
I think tomorrow it's not going to be a strong report. The company already basically announced that they're going to meet the expectations, which were only for about 2% sales growth. That's what I'm looking for. Earnings of about 97 cents. I think we're going to see about 2% sales growth in Coach, which is nothing spectacular, certainly, but at least it's not a negative number like we've seen with some of Capri's brands. As far as divesting brands, I think it's possible that Tapestry will eventually sell Kate Spade, focus more on the two stronger handbag brands, Coach and Michael Kors, and then perhaps Stuart Weitzman will be sold or shut down completely. I do think that Tapestry sees value in Jimmy Choo because it is a well-known luxury brand and it's still relatively small, and so I think there is a lot of potential growth in Jimmy Choo over time.
Wow. I mean, imagine if they actually shut down or closed Stuart Weitzman altogether. That would probably ruffle a lot of feathers. Final thoughts here, Zach. I just want to know, are there other names that you just really love right now? You mentioned the hold here on this one. Do you have a strong buy on something else?
Okay, we continue to move back down towards the morning low. Let's see, SPY. Let's see what we had pre-market. We had some action pre-market. SPY. Pre-market, we had a low around 442. 442. $442.14. Let me make sure that's the pre-market, not after hours yesterday. That is pre-market. What about after hours? No. Pre-market. All right. I don't have much to say about today. It's another flat VWAP. VWAP is starting to turn a little bit more. So if we lose the pre-market lows, 440 is right down there. 440. Let's take a look at SPY on the daily. All right. All right. So we're below the 50-day, right? So I think some of you are looking for 410, I believe. 400. Okay. Okay, so here is S&P, the spiders below the 50-day. We briefly dipped below 442.30 this morning. 442.14, I think, was the low. VIX is spiking a bit higher now. VIX. We move lower. That's what we have to look for. Okay, VIX could get up. We've been looking for 20 on the VIX for several weeks now. Once we get back above the 50-day, we were thinking that we could see a move back to 20 on the VIX. What do you want? You keep biting me. What are you doing? Cat's biting me. She must be hungry. Okay, so S&P, again, flattening VWAP. Do we move outside of this range? Yesterday, we had a flat VWAP as well. Most of the day, we just consolidated. We dropped down again today. Mm-hmm. VIX above 16, 17. The 9 and 21 day have turned up above the 50 days, so there's that. VIX. Okay, right back down to the low. Looking for a bounce back up into the range. If that happens, we will continue to form a doji on the daily. Okay, S&P. You want to sit with me here? Come here. That's what you wanted, huh? You wanted to sit behind me? This cat is so cool. It wants to sit in the small of my back on my chair. It's really weird. Okay, we're bouncing back off the low. Don't bite my wire.
right? This is a market that just cannot really catch any upside momentum as we continue to see data a bit stronger than expected. Retail sales, today's numbers were pretty solid. Mortgage apps, not surprising.
TJ Maxx, a little profit taking at the highs. TJ.
Production was a little bit better than expected, up 1%. So that's a little stronger. And the market's trying to figure out what it is. Yields were lower to start the day, Tom. Now they've come to be slightly in the green here. Bonds were up, early in the trading session. Now they're softer. This is just a market. Every time it seems to try to figure out what it is. Does it like good data?
All right, net flow is becoming more bearish. Net flow on the options. More puts being bought.
So a lot going on here, Tom. The market is, frankly, in my opinion, having trouble figuring it all out.
Yeah, Kevin, I want to kind of bring up some numbers again.
44.25, 44.50. Those are the levels. Seeing calls on the top 44.50 and calls at 44.25. And price just above those levels right now.
Now today, they just came out with a report. They raised it up to 5.8%. And if we look at some of the retail sales data, the strong consumer. Getting these little knife cuts to kind of put a cap on equities here at this point.
What is this number, hourly? Are we getting this release on this thing? What is this? I mean, they're updating GDP in real time. Is that what the Atlanta Fed's doing? That's
I think so.
Yeah. So, but I think the trend that they're highlighting is probably real. Right? I think the overall economy, the U.S. economy, is
Okay, it looks like a bear flag starting to form.
coming in pretty solid, and unemployment is low, and wages are still going up, and there's still parts of the U.S. economy that are really strong and maybe starting to reignite. Tom, I think there's a theory or a rhetoric out there that says the Fed's done. They think the Fed is done, and that the rhetoric is important, even though the Fed members come out and are unified in their talking about staying on the fight against inflation. Neil Kashkari's comments, were pretty consistent with other Fed members. We're going to get Fed minutes later on today. We'll see what that brings. That shouldn't move the market, Tom, but as you know, it always does.
Yeah, Kev, if you look at that, the expectations for the CME FedWatch tool for a rate hike in September, only about 11%. So, to your point here, not too many expectations that they're going to hike. They might be done at this point. But as far as we see this economic growth the way that it is, oil prices moving back above $80 a barrel. Is this the lag effect that's finally starting to take hold, where we're starting to see little cracks in as far as maybe the growth in the economy? But then you got the Atlanta Fed coming out raising Q3 expectations, a percentage every day, it seems like. So it seems like these forces are combating each other, but we've still had a pretty good run so far here in 2023.
Yeah, we're up 100%. We're up 100% on New York FANG. Giving back some.
Money from the CHIPS Act hasn't even begun to flow yet into these firms. So think about that. All these labor negotiations, all these higher wages, what are you do the wages going forward? I mean, there's a lot of still.
Most indices are below the 50-day right now. Let's see what the Dow Jones looks like. INDU. Dow Jones, no, it's still above the 50-day. Dow Jones, only 30 stocks. The New York Stock Exchange, NYSE. That's on top of the 50-day. Price bouncing at the 50-day. We're just below the 50-day on the NYSE. 2,700 stocks. Broad measure of market participation. Stochastics oversold. MACD is still trending lower. Over the last 3 weeks, we've had selling. Okay, XLP. Not much going on there. XLY. S&P at the low. VWAP is starting to turn downward. VIX is at the high of the day. Okay, we're taking out the low. Taking out the low here. New low of the day. All right, VIX is spiking. Okay, we continue to move lower.
Low tickler -800.
All right, so we technically took out the stops from this morning. Do we reverse here? Get a lot more people bearish. A lot of people buy puts at the low of the day. I don't know if it's out of fear or whatever, but that's usually not the best level. Best levels at the highs of the day when we can't make it through, say, 44.50, buying puts up there. I think that's where you bought puts, eh, Mondo? Okay, so the 200 days down there at 4,100. Let me enable the 100 day. Okay, so here is the one. I have the 130. 130 is 1/2 year data. Smooth moving average. 260 plus days per year. Divided by 2 gives you a 130 period moving average. Some people use the 100. I use both 100, 130. Let's see where the 100 looks, where that is. 100 period. Okay, it's a little bit higher. That's at 4,300. So this time of year, you should be aware. If you've been in the trading room for more than a couple of weeks, I've been talking about this for the last couple of weeks. The third quarter, the second half of the third quarter, a period between August 16th and September 30th, tends to be a negative return. Tends to be a negative return. Okay, and if you look at seasonality, it tells you the same thing. Seasonality this time of year. Okay, August, September tend to be down months. the worst time of the year. S&P bouncing, taking out stops now and reversing the opposite direction, it looks like.
Yeah, the news flows on the strength of the U.S. economy, Tom, like we've been mentioning. You add all that up, there's just a constant flow of stronger than expected and strengthening U.S. economic data. Now, that's a good thing for the U.S. economy. May not be a great thing for the stock market because you see yields are heavy here, or yields are higher, bonds and notes are heavy, Tom. So I think, I'm not sure. It's a great news for the overall U.S. economy, how resilient we are. The question is, what does that mean for Jerome Powell? What does that mean for stocks? It might not be. It might be a little bit too good for what Jerome Powell wants to see, Tom.
And looking forward to the Fed minutes this afternoon, but at the same time, that's probably not going to be maybe a catalyst. We have seen the market move after the minutes, sometimes more than when the Fed actually comes out and hikes or makes their decisions at this point. But next week, Jackson Hole, we remember what happened last year at Jackson Hole. Is that maybe a potential catalyst here for the markets?
August 25th. I mean, I imagine they haven't really announced it yet, but I can't imagine a scenario where Jerome Powell doesn't speak at Jackson Hole. But it's a high probability that he does, but we don't know for sure that he's even speaking there yet. I assume he will, and when he does he give another 8-minute tongue lashing to the markets? I don't know. We'll see. That came out of nowhere a year ago. If you remember, Tom, we weren't expecting it. The markets were
Okay, I'm watching for more bear flags. Assume bear flags.
history tells me that he won't do that, right? Because that was kind of an outlier in his delivery mechanism to the markets. That was harsh that he came out with. Remember, it's only 8 minutes. It was less than expected. He was very stern to the markets, and the markets reacted very poorly. I do not expect him to do that again this year, mainly because he's had a year of raising interest rates, Tom. And like I said earlier in this discussion, the market thinks we're close or closer to being over with interest rate hikes.
Yeah, big down day last year when he gave his comments, that 8-minute speech. But this year, Kev, he is supposed to make comments on the topic of structural shift. Look forward to investors and traders. All right, Kev, let's take a quick break. When we come back, we'll take a look at another retailer ahead of earnings. That's Walmart. Big box retailer is trended higher this year and is just below last week's all-time highs. Its expectations are elevated into their report tomorrow morning. Stick around. Coming right back.
Okay, still nothing on U.S. Steel? Nah, still nothing. Looking for more offers.
Let's walk through charts. One of the most commonly used features on Thinkorswim. Start by going to the Charts tab and entering in Thinkorswim. Select time frame to adjust time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting drawings, drawing tools, and then type of drawing. For simple comparisons, select studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns.
Okay, S&P. Back to S&P. We're continuing lower. More weakness. VIX continues higher. Money Magic looking for 4,400. Okay.
Low ticker -800.
All the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do, it's through that lens. There's no ulterior motive, and smoke about what we think. We are following the numbers all the time here at Lenders. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Welcome back to Fast Market here on the TD Ameritrade Network. Next time we're going to take a look at now is going to be another retailer head of earnings. That's Walmart. Shares are up about 14% from year-ago levels, up nearly 12% on the year today. Kevin, when you look at this stock, everything that Target seems to be doing wrong, Walmart seems to be doing right at this point, silently hitting all-time highs last week in this report. Now, you know, Walmart, 90% of the population is 10 miles away from a Walmart. I get the scale and the scope here that this company has. Comparable sales last quarter of 7.4%. I just don't get the hype going into this report, Kev, because I know this is our own Jenny Horn's favorite retailer out there, but I just don't get the hype around this one. It just seems like every analyst on the street keeps raising their price targets on this one into the report.
Yeah, you're right, Tom. The momentum on this stock is pretty incredible. And just look at the chart of this stock going into earnings. I mean, it is up. You know, we talk a lot, Tom, about low floats on some names. Well, this is the other end of the spectrum, Tom.
Okay, more downside.
And it shows the number that we got right here going in this 2.69 billion outstanding shares of stock of Walmart, Tom. Now, they're massive, and the revenue numbers will be gaudy.
U.S. Steel starting to tick higher.
Low ticker minus 800.
So this is a country, you know, they own groceries, right? The lion's share of groceries.
Watch U.S. Steel coming off the low. Could be some shorts covering. Maybe they know something's going on. I don't know. I got a eyeball on U.S. Steel. Could bounce out of or pop out of the blue on any hint of a offer being accepted or whatever. Seeing volume coming in. Volume X starting to see volume.
The current PEG ratio, that is the stock price to the earnings growth, 4.7. That is extremely expensive. Dollar General's PEG ratio right now, 2.1, Tom. So, yes, Walmart's had a great run. They're doing extremely well, but the stock is also reflecting a lot of that. So I think you have to be a little careful here.
All right, we're starting to tick higher here. Watch U.S. Steel. Probably just shorts covering. Probably nothing. Probably just shorts covering.
This might be the exact opposite scenario, Tom. Anything negative could hurt this stock.
Yeah, with it being at these lofty levels up here, Kevin, they've got to hit like everything perfectly, right?
Yes.
Or we could maybe potentially see a pullback. Looking for solid traffic growth as far as consumers going to the stores. Share capture, margin recovery is supposed to be pretty good. And then their initiatives, Kevin, on the digital side, I think that kind of gets overlooked. You mentioned how a company of this scale has really taken that, I guess, that technological edge and added it to a lot of their logistics and other data. And then their advertising also. They're advertising in stores, which is supposed to help them. Margins are supposed to expand this quarter, so we'll have to wait and see. But you've got an example trade for us in here in Walmart. Walk us through it.
I was very cognizant, Tom, of where this stock is, how far it's run. So what I did, I looked at in terms of the stock, and this is one we do before. It's a bit of a complex trade. It is the short this week, 165, 170 call vertical, right? About a 77% probability of finishing out of the money, and then use that credit to buy the 152 and a half put calendar, Tom. So the 1 week, the August 18th, August 25th, 152 and a half put calendar.
Okay, supposedly there was a emergency meeting last night Most likely, they're going to receive enhanced bids. A merger with Cleveland Cliffs creates $500 million in synergies. It'd be a win for everyone involved. Okay, so that's interesting. I can't confirm it. That's what I'm seeing.
It's only got a margin of about $500. The risk is the $5 call vertical minus the credit taken in, so about 475, 470 in terms of the risk on the upside. But the downside, because you've done it for credit, you really have no downside risk. But a move to that 152 strike is the ideal level, Tom.
All right, let's walk through this example trade here. In the August 18th weekly or monthly cycle expired in just 2 days, you're selling the 165, 170 call vertical, that $5 wide short call vertical. That's going to give you a credit, and then you're buying the August 25th weeklies that expire in 9 days, the 152.5 strike call, and selling the near term August 18th 152.5 strike call. So 1 week wide call or put calendar to the downside. I said call. They're both puts on the 152.5 strike. You're collecting a credit. We've got 35-cent credit on this one. It's probably trading closer to 30 or 25-cent credit at this point, but for this example purpose, it takes your break even about 165.50, Kevin. So to your point, even if the stock goes up a little bit, you can potentially remain profitable on this. Where you start losing money is above that break even price, about 160, just above 165, and you max loss above the 170 strike, which would be about $465 if you collected 35-cent credit on this one. So using the combination of two strategies here to take that bearish.
Okay, we continue to move lower, S&P.
Equate to bearish because it could be a neutral strategy also, because even if the stock rises a little bit, you can remain profitable. The apex of profitability on that one that Kevin, that example trade Kevin gave us, is at or near that 152.5 strike put that you did the calendar on. You do have some assignment risk on the short call on the upside and the short 152.5 strike put on the downside going into expiration on Friday. So keep that in mind. All right, good look at that strategy in Walmart. But coming up after the break, Kevin and I are going to be joined by Landon Swan and Mike Folio for a discussion on Ralph Lauren. The high-end apparel maker is struggling after reporting mixed earnings last week. We'll get some data to see if it's an overreaction to the downside for the stock. Stick around.
People are still thinking that Elon's going to buy this symbol so he can have it for Twitter, for X. Pretty funny.
WatchList can help you keep track of securities you're interested in. To add a watch list to the left sidebar, select the plus sign, then watch list.
Okay, watch U.S. Steel here, starting to tick a little bit higher. S&P moving a bit lower.
In the symbol box, then select enter. Continue adding all the symbols you want your watch list, then select save. The existing list is replaced by the new one. You can also create watch lists from the Market Watch tab. After creating a watch list, you can add symbols to it from different locations across the platform. From the charts tab, select the list icon and then add to watch list. From the scan tab, right-click a security and then add to watch list. And that's how you make a watch list. For more demos on how to think or swim, head to the Education Center on tdameritrade.com. I'm Nicole Petalini, host of Trading PCG and the Watch List Live. Stock is we'll bring you breaking news, experts, CEOs, influencers, and panels. It's all available on
U.S. Steel ticking higher. Shorts covering. All right, still expecting bear flags. All right, let's see what they have to say on CNBC.
Going forward.
Yeah, Steph, I appreciate it. Thank you.
Thank
That's
you.
Stephanie Link back at our headquarters for us.
U.S. Steel ticking higher.
Gary, at all?
It's interesting, Scott. I looked at it 2 days ago and I went through all of the numbers and I went back several years. So if you go back to 2019, in fact, where the earnings were not too far from what they are going to be this year. And also, if you look at 2022, last year, the expectation was that we'd be earning $14 if you look at the next fiscal year. So the reason the targets and the penalty box is they're disappointing investors. Every single time the stock takes a leg down, people buy it. Stephanie's brave to have done it, and I think that it will work out eventually. But people are underwater.
Eventually is
okay,
a loaded word
correct.
for an investor.
People are getting tired. They bought it down 20%, 30%, 40%. It's down more than 50%. And the online business off 10.5%. Not so great. And, used to have a love fest with Target. It had a higher multiple than Walmart. And that switched again. So I think they've got to show another quarter or two before people are really going to believe that it's a recovery story.
Then there's TJX, Joe, up near 5%, new record high. Yeah. On earnings, revs beat. Same store sales up 6. That was double the estimate. You own it in the T.
Remarkable. And in 2024, they now expect same store sales to be up 3 to 4%. Previously, it guided to 2 to 3%. Strong traffic trends. Let's understand, this is a consumer discretionary stock. What Target is, what Costco is, what Walmart, they are all consumer staple stocks. And one of the problems for consumer staple stocks is that the dividend yield, 80% of the overall sector, has now fallen far significantly below the 10-year Treasury. Keep in mind, it used to run 50 basis points above the 10-year Treasury. So there's obviously something inherent to the business at Target relative to Costco and Walmart. And I'll say this, Scott, I have done a awful job in trading Walmart individually, right? My own intuition, I have traded Walmart awful. They're going to report Thursday. They've got the then they've got the grocery business, which it should insulate them from some of the challenges maybe that Target has experienced. But Walmart's going to basically straight up, right? Costco is going to report at the end of September with a systematic, rules-based approach. I've owned Costco through the ETF since July of 2021. Never shaken out of it, never questioned, just followed the rules and stayed in it. And you can see what Costco has done since then. So my own foolishness has taken me out of Walmart several times, and that's the wrong place to be because you want to be in Walmart.
Why is Dick's Sporting Goods is really the only retail/discretionary play that you have right now, right? And they're next Tuesday reporting.
Yeah, that's correct. And it's actually been a great stock. They'll report next Tuesday. Valuations creeped up a little bit, but still pretty reasonably priced. So I'm sticking with it. But frankly, if I see it go through the 150 level, I may reconsider that. But right now, the momentum is just phenomenal. Even on down days like today, you continue to see a trade up. They're one company that really can't be disintermediated by online to any extent, because it's such an experience for parents to go with their kids there to pick out, sporting goods equipment, pick out clothing, sporting, athletic gear, etc. Try it on. That it's an experience. So I think that's why they're doing so well. Plus, the competition is very limited in terms of brick and mortar. So I like it. If I turn to Target, if you remove the name Target and you instead put a technology name on there, the stock will be on a defibrillator today. So I'm sort of puzzled by it's working so well.
That's pretty funny.
Given that the downside guidance,
That's pretty funny.
I get that their margins are better, but that's because they've shed
Vic's rolling over.
so do they have enough inventory to meet demand if it moves up? So I think at this point, Target over the last year,
Vic's rolling over, folks.
more of just a normal retailer with good management, but I wouldn't be too excited about it right here.
All right. Let's get the headlines now with Bertha Coons. Hi, Bertha.
Hi, Scott. Mike Pence is speaking out for the first time on former President Trump's Georgia indictment. The former vice president and current presidential candidate told the National Conference of State Legislatures that no one is above the law and that there was no election fraud in Georgia. The Toohey family of Blindside movie fame is calling former NFL star Michael Oher's claims that they enriched themselves at his expense, quote, outlandish and part of, quote, a shakedown. The family is claiming that Oher threatened to plant a negative story about them unless they paid him $15 million. Oher filed a petition in court Monday asking a judge to terminate a conservatorship initiated by the Tooheys. And Apple has moved the end call button back to the middle of the screen in its latest iOS update. The move reverses a change the company had considered earlier this summer. Apple had been looking to move the button to the lower right-hand corner, but when they move that button, I still can't work it out right when it comes up as a little pop-up at the top of your screen when you're opening something else. 9 times out of 10, I hang up rather than answer. Maybe it's just me.
You keep working on it, Bertha. I'm confident in you. Bertha Coops. All right, coming up, our call of the day. One firm sees this energy stock rallying more than 30%. Joe owns it, which means we debate it. We'll do it next.
Grade my trade.
All right, so it looks like another bear flag.
And the investment committee will debate it and grade it. Email us at askcaptime@cnbc.com or tweet us, #GradeMyTrade.
All right, a little bit of short covering at the low here. B and C pivots. Not much else going on. Market's in a downtrend for the last few weeks, and it's during a time of year where you would anticipate more downside, more weakness. This time of year between August 16th and September 30th tends to be the weakest time of year. That said, NYMO did reach a low. NYMO did reach a low of, okay, NYMO back down to minus 72. Minus 72.50. Okay, so we've had 6 TTM red bars. Starting to see potential for this yellow to shift. Okay, we're getting a nice little bid here. Apple spiking, Apple. Shorts covering. Microsoft, shorts covering, got a little spike. Okay, looks good. US Steel spiking, US Steel spiking, spiking. X volume. All right, nice. US Steel. Good job there.
It's been game on for U.S. Steel lately, and those shares are getting a spike right there by near 4% on a report from Reuters that ArcelorMittal, that's the world's second largest steel maker, apparently considering a potential offer that's according to their sources. We talked a lot about this, Jimmy, the other day because Cleveland Cliffs was in the mix. The CEO thinks they're going to get it done. They got a lot of other people want to get in on the action too, apparently.
Yeah, well, it strikes me that Cleveland Cliffs is the right suitor here. Obviously, I'm in the shares. I don't think it's bias showing. I think that what you get there is a combined company where you're controlling the raw inputs. You've got a mix of electric arc furnaces and blast furnaces. You've got the union, and this is probably the biggest point. The union only wants Cleveland Cliffs to buy the company. The ArcelorMittal, not surprising. I just think it's a non-starter. I think with where geopolitics are right now, this country wants a pro-union U.S. company to be in the top 10 of market steel producers. They don't want an international company. I don't think there's any way the union or, frankly, U.S. Steel management will let the company get taken over by an international company.
Do you worry at all that if there are, these alleged other suits,
Okay, U.S. Steel.
that it just drives the potential price up?
ArcelorMittal. Looking for a bid.
Maybe. I'm more worried about anti-competitive issues. I mean, I'm going to answer your question, but the biggest issue here.
Okay, ArcelorMittal is this German steel company. Okay, ArcelorMittal, German steel, MT.
That's not a strategic fit. That's not a company like Cleveland Cliffs where you're combining the assets in a way where you strip out synergies of $500 million a year. This from a company, by the way, that is notorious for under-promising and over-delivering.
By the way, U.S. Steel's market cap is just about $7 billion.
Let me answer your question more directly, though, because the current premium is 40%, 43% on U.S. Steel from Friday's close. That still would be buying U.S. Steel at 70% of book value. Cleveland Cliffs is at 1 times. There's a little room. Lorenzo Gonzalez is a good negotiator. He's not going to get picked. He's not going to get his pockets picked here.
Why, do you have a view on this? I mean, you have owned Cleveland Cliffs from time to time.
I have. And what was chided as a bad sale in the 20s turned out to be a good sale. Look, high quality company. I think it's subject, obviously, to economic vagaries, and the view that I gave in autos is not particularly positive for the company. In terms of the acquisition, it's very difficult, as you know, to get any M&A done at this point. So I think the stock will settle back. However, I wouldn't say that S-Mark doesn't have the synergies. I mean, pretty smart, very wealthy family. We'll leave it to them. I don't think they're just sticking their finger in the air hoping this works. So you've got a bidding war offer, which I find very, very interesting, given where interest rates are right now. And they said they've had multiple levels of interest. So if I owned it, I'd probably take some off the table. If I didn't, I'd stay away, because it's always tough playing these, and the acquisition will take a long time to close. So you'll get an opportunity to buy it at a discount to the merger price, whatever it is, when the deal gets agreed to.
Real quick, Jimmy.
Just on the synergies, Steve. I mean, when you look at Cleveland Cliffs, they produce their own iron ore. They bought a scrap metal company a couple of years ago. They have got all the scrap metal. They've got the yield coming from their auto manufacturer contracts for what's not used there. I hear you, Escar, smart company. I'm not going to come back at you at that. I just think the synergies are so obvious with Cleveland Cliffs and so obviously not with Escar.
I got to leave it there. We'll take a quick break. Mike Santoli on the other side with his midday words next.
Okay. Okay, U.S. Steel. Nice move on U.S. Steel. All right, so that looks pretty good. Here we go. U.S. Steel starting to go now.
We're back, senior markets commentator Mike Santoli here for his midday word. What do you think about today?
You know, the market's acting in a way that's making potential buyers feel good about being patient. You know, it's kind of coming in each day. It's not going to run away from you. We spoke yesterday about how maybe sometimes you need a little more of a scare to feel clever about buying this pullback. It still doesn't seem like it's anything in a macro sense worrisome. If anything, we're just trying to assimilate how fast the economy is growing at the moment and whether that can continue, whether it's going to engender a Fed mistake. Credit markets, very firm. So all the stuff you would look at to say, should I be more worried than just what I'm seeing in the tape action itself? It's probably not.
Only 3%, right?
Well, it's like 4 now, you know, but it's sort of, again, you're seeing like Apple test these levels that people think might be significant. That's an ugly looking top formation, or at least a sharp break in momentum for the likes of Apple. So I think there's some
Okay, S&P. So U.S. Steel got looks like another bid. Nice volume. We saw volume coming in here right at 1222. We moved back above VWAP 1225. Let's see how far this goes. See how far it goes now. Nice move. What the hell happened there? That was weird. I didn't know you could drag price from one panel to another. That's weird. Just learned something new. Okay. So we're not out of the woods yet. We still potential for another bear flag on the S&P 500. Okay, still another bear flag. This could roll over. Some of you are looking for 4,400, 4,410. All of that's possible. We're below the 50 days, so you know the bias is lower. We've got the 20 EMA still drifting lower on the 60-minute chart. So that's the way I gauge whether I want to be long or short. This is still a short setup. The 20 EMA continues to drop. Okay, when the 20 EMA, that green line is dropping, price below, you want to be short. Short against resistance. The 20 EMA is the red dotted line. Plus you got 4,500, 4,450 has been resistance. We got rejected there again. So good job, folks. Good job in the trading room. Yeah. Okay, U.S. Steel continues its climb. Volume continues to pile in. All right, let's go see. I'm gonna pull up short squeeze and see what we're doing here. Short squeeze on short squeeze data on U.S. Steel. Let's see. X. It's not as much as I thought it would be. Not as much short as I thought it would be.
So I like the call because I think what they're doing is they're kind of highlighting the underperformance, the outperformance relative to its major global peers, and that's been an important way to think about owning Chevron. Over the last 2 to 3 years, Chevron has significantly underperformed ConocoPhillips and Exxon Mobil. Prior to that, the 2017 to 2020 period, it was Chevron that outperformed. So
what's it trading today? U.S. Steel. Let me go check that out. X. Daily. Okay, so I don't know.
It's going to accelerate as you move out of 2024 into 25 and 26. So it's viewing the opportunity that it has in the Permian Basin and in the Tengiz. It's realizing that the capital allocation strategy is going to get some tailwinds behind it. And I haven't even mentioned the fact that oil prices might ultimately act as a tailwind as well. So I think the upgrade is a good one here.
New buy for you, NextEra Energy. Speaking of
Okay, U.S. Steel.
Tell me about this one.
Yeah, so we own some of it. We bought it a couple months, maybe 6 weeks ago.
Okay, you bought more.
Yeah, we bought more because the stock's come down. So why was the stock going down in the first place? It's because it's a sustainable energy company in addition to being Florida Power and Light. It's about half and half. And we know that electricity demand is going to double or triple in the next 20 years. They're a real leader in the field. And ESG funds, of course, are losing assets. That's been bringing it down. We think the stock is very attractive at this price. A lot of growth over the long term and low risk.
All right, still ahead to set up on Cisco earnings after the bell. We'll find out what the committee is expecting of it.
All right, U.S. Steel continues to climb. People asking me if I think the deal's going to go through. How the frig would I know? I have no idea if it's going to go through, but price action says there's still a lot of people who are betting on it. I asked my magic 8-ball. It keeps giving me smart ass answers. So no idea. ArcelorMittal reportedly discussing possible bid for U.S. Steel. That's the headline. So that sent the shares higher from 30.50 up to 32, almost 32.50, backing off a little bit. So we'll see if this, how this goes. It'd be nice if they kept this stateside and offered $40. That's above recent highs. Let's see. Let's go out 20 years. 20 years monthly. Ooh, wow. Look at the levels here. Imagine that. Uh, huh. That's pretty interesting. I didn't know. I haven't looked at it.
Here's where Cisco's been recently. They had some supply chain issues about a year ago. They worked through those, and in the last quarter, there were concerns that they weren't bringing in enough new orders to fill their backlog, which is pretty substantial and that they're going through. However, think about what's happened in the last 3 months with expectations for the economy in general. I think it's likely that
It's a bear flag, so we could see this continue lower, folks. Don't be too biased. The trend is down for now.
This is what you told the producers. I'm going to set this up real well. Peak 20 years ago, there are better places to invest. You said it, not me. I'm just reiterating what you said.
More than 20 years ago. Yes, we think there are other opportunities, but it's been a good performer. And I hate being negative about a company that's working so hard to sort of get back its audience and build up its profile.
You just have to know what it is. It's not NVIDIA. Nobody's saying it's NVIDIA or some crazy story stock like that.
Jimmy's so funny.
It does what you want it to do, which is give you no drama. Hold it for a long time. You don't have to worry about it.
Quickly, Synopsys.
Synopsys, a name that we've owned since inception in November of 2020. It's been a very strong performer for us. Look for the revenue growth here to accelerate. It's going to need to do that to maintain this lofty valuation it has right now.
All right, back in a couple of minutes. We'll do final trades next.
All right. Can you imagine? Holy smokes. You imagine if they offered above its 20-year trading range? The highs on US Steel was 171. The median range, the high of this median range here, moving sideways, has been about 45. Okay. So I'm probably going to keep buying calls, even if these next week calls don't benefit. I'll probably buy a few weeks out and see what they do. This deal's probably going to go through at some point. So just something keeping me entertained. Tilray trying to get back above VWAP. It is. TJ Maxx at the highs of the day. Excuse me. Okay, US Steel. That'd be kind of cool if they offered it 45, 50. I remember one time I had like 20 calls on a buyout stock. One day it was trading, I don't know, it was off maybe 25%. Next day, that was when I was over by Day Trader Rockstar's room. And they came out with an offer that was Siemens came out with an offer to buy this company. It was like some obscene number. It's like $20 above the strike that I bought. And it was like about a $50,000 change in P&L within one day. I think it was like $52,000 on those 20 calls. Just boom, it jumped. I always remember that one. So I'll stick with US Steel for a while, bottom line. Whether it means do the 825s make money between now and then? Or do I have to buy a few more weeks out waiting for this deal to work? Did you eat anything yet? What'd you eat?
Drama sometimes helps you really outperform. So bring it on. All right.
Jimmy, why don't you go next then?
Be calm and cool, no drama. Cleveland Cliffs. Look, I think they'll get the deal done, but even if they don't, they've got a lot of cash flow here, and they're going to do something with it. Most likely buy back a ton of shares.
Gary?
Blackstone. If the economy is heating up, the companies that they own will do well, and they'll sell for higher expectations.
All right, good stuff. And Joe T.
Morgan Stanley now pulled back 14% from its February high. I think you can buy it here in the mid-80s. Use a stop below 80.
Okay, so the bias is lower today
For the banks.
Yeah, but for the bank.
All right, I'll see everybody
for now.
on the closing bell again. Liz Ann Saunders, Rich
Bias is lower.
I'll see you then. Dow right now is fighting it out. It's down 25. The exchanges now.
So bear flag, bear flag, bear flag. That's what I'm anticipating. If we hold this level, that'll frustrate a lot of bears. The bulls are already frustrated. Been off for a few weeks now. Antoine, close that. Goodbye. Goodbye. Take cat. Take cat. Just put her outside for now. Okay, thank you. Okay, we got two buy signals here at the same level.
And as rates keep rising and mortgage demand keeps dropping, there's one housing name positioned to benefit from a rising rate environment. The CEO will join us ahead, but we begin with the markets and Bob Pisani at the New York Stock Exchange. We've been on a little tear lower these past few days, Bob.
Yeah, in fact, really the past 2 weeks. So we've been trying to rally midday. That's a very typical pattern. And then we just moved down late in the day, sitting near the lows today. We were positive earlier in the day. Take a look at the major indexes. S&P is now down 10 of the last 12 days. That's an unusual downdraft. In fact, the same with the Russell 2000. It's been drooping as well, down 10 of the last 12 days. NASDAQ Composite's down 6% from its recent highs. The Dow Industrials have been holding up better than the other averages, and that's primarily because it's a little more defensive. It's got some consumer names in it. It's not really an industrial index. So take a look at some of these names here this month, and you can see Amgen's been outperformer for the Dow, Johnson & Johnson, Merck, Home Depot. These tend to be more defensive, consumer-oriented names. Caterpillar's also been strong. But tech and big banks have really been a problem for the major indexes, even for the Dow, frankly. If you take a look here, Apple's been down almost 10% this month. Salesforce is down 8%. Goldman Sachs down 7%. And Intel's down 5.5%. So those tech sectors in the banks, JP Morgan also has been a drive on.
Okay, S&P driving a bit higher. S&P.
Elsewhere today, retail's been doing a little better. We had Target doing pretty well, even though the sales numbers were poor. Inventory levels were down. TJX had great numbers overall. So those two names are bringing up what we call the discount sector. So Dollar General, Ross Stores also are.
ArcelorMittal discussing. All right, so several news outlets are covering ArcelorMittal potentially buying or putting in a bid to buy U.S. Steel. I can't imagine the SEC would allow that to happen. A foreign firm buying U.S. Steel. All right, Tesla's starting to bounce here. Tesla moving a bit higher. Okay, Apple turning. Apple.
Investors are looking for any clues, about where rates might go and whether there is any hint anywhere of rate cuts. Steve Leisman at the Federal Reserve with what to expect. Hey, Steve.
Hey, Tyler, good afternoon. Minutes from the last meeting set to hit the tape at a time when much debate about the outlook for Fed policy. Markets remain wary of near-term hikes that are possible.
The Fed won't raise in August. They'll raise in September, from what I understand. So we got meeting minutes at 2 o'clock. 2 o'clock meeting minutes.
Reveal the leading edge of a debate about the appropriateness of keeping policy rates elevated, even as job growth.
Minutes.
All that's true, and good arguments for doves. They want to hold rates or even cut them. Yet the hawks have gotten support in recent economic data showing how resilient the economy has been, with third quarter GDP forecasts edging up. Data show an economy accelerating, not running below potential, and the Fed has said that's what we need to do to bring down inflation. So the debate over policy between hawks and doves already, we're going to see it in these minutes, it may have intensified since the last meeting.
I don't mean to spin the clock forward and get way ahead, but I know something happens next week, and that is the Jackson Hole meeting. What is the outlook there?
Well, I mean, I think we're bracing for what is that statement by Powell. He laid down a marker last year about the need for the economy to run below potential, about the seriousness of the Fed in combating inflation. At the same time, they have already had a lot of success in bringing down inflation with an economy that's been really tearing it up. I don't know if you saw today, Tyler, the latest Atlanta Fed GDP now, which
Apple making a higher high, higher low.
It's 5.8 today. Now, wow.
Atlanta is Atlanta, though, right? I mean, they're always up there, out front.
You are correct, sir. And if you look at my Twitter feed or X feed, whatever you want to call it, you'll see that I have documented the errors there. This far out, 70 days from the publication of the Atlanta Fed, of the DEA's GDP report, they're high usually by 1.7, 1.8 percentage points. So there's room for it to come down, but don't let that.
Low ticker at -800.
We are running above potential. Our CNBC wrap it up.
Okay, U.S. Steel fading off of that potential offer. This is a familiar pattern that started to show up on U.S. Steel. It'll get a bid, it'll run up, people sell into it, and then we fade until we hear the next offer. All right, so we're making new lows. SPX, new lows. Okay. I think the cat is throwing herself against the door, trying to get in. I know you're in there. I can smell you. Okay, looking good, Mondo.
Why are rate cuts not realistic? You heard Steve basically say exactly that.
Well, if you look at the entire history of the Fed, they have only cut rates 6 times when employment was below 4%, and 5 of them were under Jay Powell. The last time before that was when interest rates were, the Fed funds rate was at 6%. So it's highly unlikely and really difficult to justify rate cuts, particularly when you think about where rates are right now, right? It's not like we're at some astronomical level. We're about 60 basis point over the long run average for the Fed funds rate. And so there's more downside for the Fed in cutting rates too early than there is upside. And I think they've made it really clear that they want to see everything looking better, labor, housing, shelter, all of that, before they're going to even consider cutting rates.
I take your point that rates are not, by historical standards, high, but some rates are high. I mean, you look at mortgage rates above 7%. They haven't been this high in 20 years, Julie.
I still think that people are thinking of the last 10, 11, 12 years as, standard. And it's just not. It's a complete anomaly to be at, 0% interest rates for this long. And I think, a lot of money managers are younger and they don't really remember that rates can be significantly higher. And if you think about, upside, downside, it really just makes more sense that we would get down to a place that's more like 2 to 3% than 0. And so I think that limits the, the upside potential.
Brian, let's talk about the case for hiking. There is some indication that there's going to be at least one more hike. You say there's really no reason to do that either. So
Yeah, it
why
doesn't
are we
really
paying
seem
these
like there
Fed
is a
guys
great-
anyway? If they're not going to do anything, let's not pay them, right?
Yeah, and so, it doesn't really seem like there's a good reason to hike. Maybe they should just hold. And in fact, maybe the longer that they hold, that can almost be like a
All right, more downside. That's going to be a big one there, Mondo.
Extreme low tick alert.
Look at where we are with real yields and break evens. We're basically where we were in the 2004 to 2006 period. And I'm actually kind of curious about Chair Powell if he's going to channel his inner Jim Bullard here. Coming out of the global financial crisis when rates were pegged at zero, Bullard made the argument saying that it's 0%, but the economy's fine, so why do anything? Just keep it at zero. Well, now if you've got the Fed funds rate at 5.5, we're cruising along, things look good. Why mess up a good thing? So perhaps his argument is going to be that things look fine for now, and so why really mess with something that looks good at least so far?
So if we're looking, Julie, at this higher, and I saw you nodding there as Brian was talking. If we're looking at a kind of a static or a stasis state in interest rates, and we say higher for longer, how much longer?
All right, we'll continue to move lower. Apple turned south.
10 to 5% inflation was pretty easy, but getting
Okay, so we're moving lower here.
is probably going to be harder. And I think the language out of the Fed has been
Okay, looks like 4,400 is going to get tested pretty quick at this rate. 44.10 is only eight handles away. Susie looking at 44.10.
The other thing is I don't really think that we're going to get to this place where, inflation kisses 2% and the Fed is like guns blazing cut rates. I really do think they're going to want to see some consistency and some holding before they start to cut.
Unless, Brian, there is a market slowdown in the economy, and we don't see any signs of that, really. I mean, I guess real estate is somewhat challenged by those higher interest rates, but home builders have been doing pretty well.
Yeah, I was going to say that the only parts that seems challenged by it in the real estate market is with
Pretty decent move down.
Say home builders do have to make concessions on price and things like that. If the housing starts, multifamily is at a record level. Single family was a record level about a year ago, so you've seen some cooling there. But for the most part,
VWAP down and to the right.
And the fact is that
S&P 500 down and to the right. VWAP, just the opposite of a bullish trade, as you know. Nice.
So, Julie, in this kind of environment that we've been talking around, where are the sweet spots? What should I be looking at, investigating, researching in terms of equities or fixed income?
I think because if there's anything that
Low tick alert minus
walking
800.
into this economy, this year, thinking, oh my God, for sure, recession, and I think it's a real lesson to all of us that it's really impossible to predict the direction of the economy. There's just too many factors at play and exogenous events that can happen, like the war in Ukraine. So I think your best bet is to be fully invested in quality, because if you're really focusing on companies that have durable competitive protections, they're going to do well if the economy softens, and they're still going to participate in the upside. If you were fully invested in the most defensive names, you've missed out on a lot of this rally. So I think it's really important to have balance, but it's not about growth or value. It's just about quality.
Quality meaning like what? Give me some examples. I like quality too. I'm all for it.
Yeah, Mondo, we'll meet up some point. I'm sure we'll get together.
For us, we try to focus on the qualitative metrics.
VIX spiking.
Durable competitive protections, right? If you think of a company like Fair Isaac, FICO, everyone assumed that with all of these new fintech companies that all of their strengths and competitive protections would be eroded away. And instead, those fintechs have kind of gone by the wayside. It turns out that crawling your Facebook data isn't as good for your credit score rating as actual credit data that FICO has. So, I think those are the types of businesses where they can absolutely defend their competitive protections and have better returns on capital.
Yeah, that's true too. Yeah.
Brian, any thoughts there, reactions to what Julie just said, or any areas, targets of opportunity in your world?
All right, hammer forming right now at 44.20. Just shorts covering.
So if you kind of fold that in, where we're seeing opportunities where you intersected with valuations, is more of the small to mid.
Shorts covering. Pretty much all stocks are seeing shorts cover.
Instead of a bull market or bear market, this might be more like a bulldog market where you just try to clip the coupons and just kind of charge ahead.
All right, folks, thank you very much, Julie. Ryan, thanks very much for being with us today. Appreciate it.
Thank you.
See you soon. All right, coming up, target. Target's earnings beat overshadowing its cut to full year guidance. But despite today's move, it is still down 13% since the start of the year. We will look at what's dragging down Target and what to expect when Walmart reports tomorrow morning. Plus, an inside look at the health of the financials with the CEO of Jack Henry. More than 7,500 small banks and credit unions rely on them for payment processing. We will look at how they are dealing with the ripple effects of the recent banking crisis. The exchange is back after this.
Bitcoin still hasn't bounced. It moved back to 29,000 Bitcoin. So even though Coinbase got approved, looks like they got approved for trading crypto futures in the last 24 hours, looks like. Coinbase got approved to trade crypto futures. Even Coinbase, they sold the news. And Bitcoin's not doing much. So everything is pretty much taking a break over the last few weeks. This is a time of year where, people get in their last vacation. And we look for the end of September, the beginning of October, and the fall months for a rally in the markets.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow futures, forex, and stock options. Get a free trial at tickstrike.com.
As long as we stay down here below 44.50 and certainly below the 50-day, 50-day. No kidding. Yeah, I've been gone for 3 years, Mondo. August of 2023, 2020.
Welcome back to the exchange. Target slashing its full year guidance despite beating estimates on the bottom line. Comparable sales also saw their first decrease in 7 years as consumers pull back on discretionary categories. And as you can see there, the stock is hovering.
All right, another bear flag. Another bear flag.
2020, middle of the pandemic. On the flip side, TJX all-time high, raising its full year forecast, saying customers are spending big on name brands and home goods, home goods, home goods. My first guest, our next guest, says there are better names in retail than the two we just mentioned. Let's find out why from Jan Kniffen, CEO of J. Rogers Kniffen Worldwide. J. Rogers, good to see you, sir.
Good to see you again.
Let's talk about Target and why you're not impressed there, and then we'll move to TJX and onward.
Well, Target gave us a -5 comp, and Walmart's probably going to give us a +5 comp tomorrow. So that's a big difference in the performance of two sort of similar companies. Yes, Walmart's much more non-discretionary. Target's more discretionary. Walmart has huge food business. Target's got a small food business. But all in all, they do compete with each other. And Walmart's winning the game. We're going to see that when they release tomorrow. So I'm just not...
Walmart releasing earnings tomorrow. So most of you know that.
The expectations were so low. But that was a pretty bad sales number.
What does Target, Jan, need to do? I mean, you're into this at a level few people in the world are. What does Target need to do to improve performance and juice the stock?
Well, Target's out of stocks at the shelf level, the stuff that isn't there so you can't buy it, or high at the moment, which means they're still having some kind of inventory problems. So they're getting the inventory levels down, but they're not getting their mix fixed yet. They've got to do that before we're going to be happy with what they're delivering. And so they've had an inventory problem now for almost 2 years, right? And they've been fixing it on a gradual basis, but it's cost them money each time they've been trying to fix it. They're not there yet. Will they eventually get there? Yes.
Another bear flag on the S&P. 4,400 is a major level. If you're bullish, you don't want to lose the 4,400 level.
Let's talk about TJX. Big numbers there, all-time high on the stock. But are you a little
Wow,
warm on it?
that's we're past the 382. Doesn't look that bad. This candle doesn't look so bad on the daily. I expected to see a much larger red candle. Okay, we're 4% off of the highs, recent highs.
So I worry about them getting way overstored and there just not being enough inventory in the world to fill them all on, off-price basis. And so I just don't like the space. But if you're going to bet on one of those, TJX is one of the best ever, and Burlington is the most improved ever.
So let's talk. So TJX, a Walmart, Home Depot, and what was the fourth one? I'm sorry.
Costco.
And Costco. Those are your four big hitters in the center of the lineup. Is there a department store that you would nibble at here?
Oh, I'm kind of a fan of Kohl's now that Tom Kingsbury has taken over, and I think he can do for Kohl's what he did for Burlington, which is fix the problems. And I think if you fix the problems at Kohl's, you'll see a benefit to the bottom line, and you'll see it trade the stock up. I also like Macy's because
Kohl's was not busy at all. I don't know what this guy's talking about. All three of these, really. Dillard's, Macy's, Kohl's. I've been in all three of them. There's not a lot of, there's more employees in the store than there are customers. At least the last time I went. So might be different in your area, most likely is. All right, we're starting to see a little bounce. Cat's throwing herself against the door again. Please let me in. All right, so
they're running the business much like these off-price guys do. Buy it, live with it, sell it out, mark it down, do whatever you have to do. So you're fully responsible for that process. And they've got a better process of doing it. Remember, Macy's didn't have much inventory problems during the whole pandemic period like everybody else did. They just got better at operating their business. And, they've got new management in place, and they've done a really good job with that. And now they're about to have another change of management. But they have changed the fundamental way that they operate the business on the buying side, and they're also better on the selling side. But mostly this has been fixing the buying operation.
And nobody knows.
all right, so looks like we could be building another bear flag.
Thank you.
Coming up, the collapse of the trucking firm Yellow.
You could see a long perhaps back to VWAP, but that's as far as I would anticipate that we would get today. If for some reason we got above VWAP, I would look for a move back to the top of the range, which is 44.50. I definitely don't see us getting above 44.50 today. Just judging by price action, with VWAP turned down to the right and we're making lower highs and lower lows, those of you in the trading room trading puts are doing a damn good job. And I don't see the calls working at the moment. Maybe if you get something down here and we rally back up to VWAP, that would be a nice trade. But I'm watching around 2 o'clock. We'll get the Fed minutes. And maybe we'll get a rally. Institutions, maybe they buy the dip here and catch everybody off guard. Or at least the bears anyway. I don't know. If you look at the daily chart, hard to be bullish right now. You got the 9 and 21 day about to cross down through the 50. Now, this is just short term, okay? Intermediate term, we're still in a bullish trend. Intermediate term, let's see, do I have a weekly here? All right, intermediate term, we're above Kumo. Can we come back to 4,000? 4,025? Yeah, Kumo is green. So we could also move sideways to slightly lower. So, all right, so there's your highs over there. The December, January high, 2022, the bear market. All right, so the bear market, we were down below Kumo the entire time. Now we're above. So any pullbacks, looking for a bounce. Got flat Senkou right here too, flat Senkou. Senkou B is flat. That would be a major support level. You got Tenkan and Kijun-san. Kijun-san down below. Look at where the green line is there. That's Kijun-san, Chikou. Sorry, Chikou follows price by 26 periods. When it's above, you can find support on a pullback. Chikou pulls back to the top of this Kumo. Look for a bounce. That would mean we'd be down there near 4,300, I guess. 4,250. A lot of ifs right now. So markets don't top in one day. Takes days and weeks. We do have several weeks, 6 weeks to go into the end of September. That tends to be the weakest time of the year. So if you're concerned about the markets, buy some out of the money puts for next week or buy some SPXS, which I have a position in. I have 800 shares there. SPXS, that's moving the opposite. Okay, it's at the highs. This one doesn't move that much. I mean, we got in right around 13 and change. So this is only up $1. So you have to have a lot of shares to neutralize your position in your portfolio. If you take a little bit off of your portfolio and you add some SPXS, or you have puts like Mondo was trading this morning and others, then you got a nice hedge for downside. I don't think we're going to go straight down. I think we're going to get a reflex bounce at some point. We got NYMO. Where's NYMO right now? NYMO, when it gets down to this level, it's at minus 79. NYMO's at minus 79. We're near an inflection point. Okay, and last time we were here was March of this year.
Efficient operator, the one that can absorb that capacity consistently, those are the ones that are the long-term beneficiaries of this.
So nationally, we've seen a very clear upswing in rates in recent weeks, still negative year over year, but you see the uptick in just the last few
NYMO.
We also spoke with the CEO of Old Dominion. That's a trucker for Tesla, Walmart, Amazon, as well as the suppliers of those big box operators. CEO Marty Freeman believes we're still in a freight recession, but he does see improving holiday demand.
Those suppliers are telling us that their inventory levels are getting low, and they hope to build those inventory levels back up to be ready for the Christmas season. So we're hearing positive things from them. We're also hearing positive things from Tesla. You know, they're looking at production.
So higher rates and higher volumes. I also spoke with CEOs about higher diesel prices that have risen about double digits over the past month. They expect these higher diesel prices to be a tailwind for both their top.
Yeah, I agree with you, Armando. It's getting a little extended.
So, Frank, let's go back to the question of yellow freight. What are these CEOs saying about acquiring any of the assets, any of the trucks, the equipment of yellow?
Yeah, we talked quite a bit about this. I spoke with the CEOs of Saia, Old Dominion, as well as the CEO of STG Logistics. That's a private company partly held by Oak Tree Capital. All three said they'd be interested in the real estate. That's the less than truckload terminals and not so much in the equipment. The real estate has a lot of value. Obviously, it helps you move containers in some cases or shipments in some cases. It gives you a home base. But they say they're not as interested in the trucks, not as much demand for the actual road vehicles. But the real estate, definitely some interest.
So maybe you and I should go in on one of these big trucks. They're going to be out there.
I mean, Tyler, let's do it.
Let's do it. Sounds like fun.
Let's do it. Maybe on an open road.
I love it. All right.
Open road, man. Just maybe rebels.
All right, Frank. Good to see you, man. All right, quick programming note. You bet. Don't miss our exclusive interview with the CEOs of GM and Hertz coming up in the next hour. That will be on Power Lunch at 2:30. Mary Barra and Steve Scher will be with us. Now, Pippa Stevens for a CNBC News update. Pippa.
Hey, Tyler. Well, Speaker Kevin McCarthy told House Republicans he believes Congress will have to pass a short-term funding bill to avoid a government shutdown. Sources tell NBC News about the conference call, which highlighted a growing consensus that Congress doesn't have enough time to reach a funding deal before money runs out at the end of September. Lawmakers haven't set a deadline for the
Oh, now we're going to get more debt ceiling talk.
Amazon is pledging to make it easier to find discounts for the life-saving drug insulin. Rather than have people manually search and then enter coupons for insulin, Amazon says it will now automatically apply the discounts, which the company says could lower the cost of the drug to as little as $35 per month. And a new child labor law for the internet age. Illinois Governor J.B. Pritzker recently signed an amended law allowing teenagers over 18 to sue parents if they were featured in money-making social media videos and not.
Cat's throwing herself against the door. Pretty funny.
Tyler, back to you.
I'm going to go after my son immediately for this. Pippa, thank you. See you in the next hour. All right, coming up, payment processor Jack Henry on pace for its worst. I thought it was an Amazon series. For its worst day since the collapse of Silicon Valley Bank. We'll tell you what's behind the decline and ask the CEO about the state of the banks. That's next, right here on The Exchange. Stay with us.
Okay, yeah, Mondo. I use the SPY 60-minute. I use the 60-minute for the same, whether it's SPY or something else. I use the same way you're using the 5-minute. I use the 5-minute for tweaking on, intraday reversals. But as long as it's below the 20 EMA on the daily and the weekly, the daily and the 60-minute, I mean, there's no reason to think a big long back to the upside. Plus, you add in the rejection levels or the calls and put walls, and that further helps you stay short in this case. Since the top that we put in on the 27th of July, we put in the top when we started drifting lower. For the last couple of weeks, 3 weeks, we've been drifting lower.
Shares of Jack Henry down 7% today, making it the worst performer in the S&P 500. That's despite reporting a beat on the top and bottom line. The guidance for next year coming in below estimates. The company provides payment processing services for the financial industry, mostly focusing on small and mid-sized banks. For more now, we're joined by the CEO, David Foss. Mr. Foss, thank you for coming on today. I appreciate it.
Happy to be with you, Tyler.
Good. I mean, you can't find fault with a report where the earnings per share whipped the estimates by 15 cents. Revenue was way up compared to estimates and last year. It looks like the nitpickers are picking a nit over your guidance.
Yeah, I think that's a good characterization. So what we reported this morning, revenue for the quarter, and this was the end of our fiscal year. So we just reported the fourth fiscal quarter. Revenue was up 11% on a GAAP basis for the quarter. Operating income up 20% on a GAAP basis. We set a quarterly sales record, all-time sales record in the fourth quarter. And for the year, we set an all-time annual sales record. And as I reported this morning, our sales pipeline is larger than it's ever been in the history of the company. So really excellent performance for the quarter and for the year for our company. There was, and then we issued long-term guidance this morning, top line 7 to 8% per year for the next for the foreseeable future. And then we shared 20 to 40 bps of margin expansion for the foreseeable future, not for the next fiscal year, but kind of as we take that longer term view.
So why are those Wall Street meanies?
Cat is throwing herself against the door again. She really wants to get in.
There were really two big things in the guidance that I think has confused some people. One thing is we report every quarter on what's called deconversion revenue. If one of our customers is acquired, we rarely sell software. Most everything we sell is recurring revenue in nature, so long-term contracts. If one of our customers is acquired by another financial institution, they buy their way out of the contract. That's called deconversion revenue. Deconversion revenue is very unpredictable, and it's not a reflection of the operation of the company. And so we announced this morning, we're going to change, we actually did an 8K a couple weeks ago, but we talked about this morning. We're going to change the way we report on deconversion revenue because it's not a reflection of the operation of the company. I think that has kind of confused some people, and they're working through that model.
Okay, trying to bounce now.
We announced a program that we call Voluntary Early Departure Incentive Program, which is essentially a program for long-term employees to leave the company early, retire, if they've been at the company for a long time. And that will produce some expense in the first fiscal quarter of this year. And so we talked about that. So I think people trying to work those into their models and figure out what does the future really look like for Jack Henry is what you're seeing today. But as I said, our pipeline is larger than it's ever been in the history of the company. And we're a 47-year-old fintech. So really things look very promising right now.
Well, I have to say, you gave me a very candid answer there. I appreciate it. And I appreciate you coming on today. It's not every CEO who would choose to do that on a day where the stock is taking a little bit of a swoon. Let's talk about the market you serve, or the markets you serve. And they are small and medium-sized banks. And those banks have been, they've been targets of Moody's, and some have been downgraded. They've been in the news, some of them are on Bloomberg.
Okay, another bear flag below the 20 EMA. The only thing I'm looking for are counter trend rallies. We could see a move back to VWAP. I'm not taking it. I'd be more inclined to take next week's puts on any bounce back to VWAP that gets rejected, or 44.50 if we manage to get there by the end of the day. That would be for insurance, since most of my positions are longs, both in my trading account and retirement accounts. U.S. Steel, off the best levels of the session. All right, starting to move higher. All right, so U.S. Steel showing a ABCD pattern. U.S. Steel.
Reported no really significant inflows or outflows, and 9% reported inflows of deposits into their financial institutions. They're well capitalized, well run generally. They're kind of the lifeblood of Main Street America, if you will. And they've been largely unaffected by what happened with the meltdown of Silicon Valley Bank and the others. But they've been penalized a little bit, and so guilt by association, I guess. Jack Henry serves those customers. We've been kind of attached to some of the concerns that are happening in that space. But our customers are continuing to spend money, continuing to look at contracts with Jack Henry. So it really has not had much of an impact on us or our customers.
Yeah, when we talk to some of the CEOs of mid-sized banks like WaFd, Brent Beardall there, and Valley National, they're doing very nicely. They're not reporting distress at this point. So
No, and when you think about those customers, so you look at our customer base, 60% of small medium business loans written in the United States are written by the customers that we serve. 80% of ag loans are written by the customers we serve. Now, those customers, those medium-sized financial institutions, really are the lifeblood of Main Street America. And if you look at what's going on overall today, as far as small to medium business,
Yeah, that's a good possibility. We could get shorts to cover before the Fed minutes.
they anticipate that the future looks pretty bright for them right now.
We're going to leave it there. David Cross, thank you very much. CEO of Jack Henry. Appreciate your time today.
Thank you, Tom.
But still ahead, this company swinging from a loss to a profit in its first report since going public. Stock lower right now, but up 108% since the IPO 2 months ago. The name and the details when we reveal the mystery charts.
Okay. Looks like an ABCD pattern on U.S. Steel starting to turn. Okay. Shorts covering into the Fed. That makes a lot of sense to me. I would agree with you. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Fed Day, Fed minutes anyway. Wednesday, the 16th of August. This starts the weakest 6 months of the year. Weakest 6 months of the year, potentially. So just be aware of it. Okay.
Welcome back, everybody. Cava off its highs as the restaurant chain swings from a loss to a profit in its first report since going public. Oh, let's bring in Kate Rogers. Hi, Kate.
Hey, Tyler. It was a big first report for Cava, posting a profit of 21 cents in its first quarter as a public company on revenues of $173 million. Same-store sales soared 2.3%. Jeffrey's noting this morning tailwinds for the brand include successful limited-time offerings like spicy falafel and momentum thanks to new consumer awareness post-IPO. While the company has been compared to higher-priced meal peers like Chipotle and Sweetgreen, Cava co-founder and CEO Brett Schulman sounding like they're taking a beat on pricing at the moment, being mindful of the big.
All right, nice reversal so far. So we'll mark that in as a line in the sand, 44.20.
Our guests, whether that's the increase in gas prices recently,
cost pressures on utility bills with the extreme heat we've seen across the country, student debt, loan repayment waiting in the wings, and you do have a Fed hawkish posture that's looking to temper growth to ensure that they tamp out any reigniting of inflation. So we wanted to take that into consideration as we give our future forward-looking forecasts.
But guidance for the full year was strong. Same-store sales growth up 13 and 15%, and it plans to open between 65 to 70 new restaurants in fiscal 2023. It's testing digital advertising. It plans to do, reminded me of some of the pipeline that Chipotle's built out over the years under CEO Brian Niccol. This company often compared, of course, to both the Chipotle and a Sweetgreen, and both of those stocks, Tyler, are also some of the best performers of the year so far.
So when he was talking there about the headwinds, is he coding that he's concerned that their revenue?
Okay, so 44, what was it? 44.20, 44.17, 44.17. All right, using Vanter's GAN calculator, we need to get above 44.38.
Again, the price point from a consumer perspective at a Cava, at a Chipotle, at a Sweetgreen, a little bit more expensive, than a McDonald's, a Wendy's, a Jack in the Box. But again, it seems like consumers are willing to pay that premium. Piper Sandler talking about the wellness effect, right? That this is having on consumers and people kind of seeking out healthier dining options, and that makes companies like Cava, in their eyes, a win.
I'll have to go find one. I don't know whether there's one around here, but I'll find it if there is one.
They are on the East Coast and in New Jersey, so I bet you could find one.
Oh, okay, good. Thanks, Kate. Appreciate it. Kate Rogers. Coming up, the 30-year mortgage right now, above and firmly so, 7%. Mortgage demand dropping as a result. So if you're in the home loan business, that's not a good combo unless you are this particular company. Another mystery chart. It's in the home loan business, but actually benefits from rising rates. The stock up more than 40% this year. The CEO will join us next.
High took alert plus 800.
Okay, so we're getting a nice reversal here. Okay, Cayman, you might actually get something out of that trade. Well, the FANG stocks just lit up. All right. Apple and Microsoft went green. Amazon's got another $1 to go green. U.S. Steel, ABCD pattern. U.S. Steel.
Analytics.com.
Welcome back, everybody. High mortgage rates and high home prices still crushing affordability, and no surprise, it's having an impact on mortgage demand. Diana Olick here with the latest numbers. Hi, Di.
Hey, Ty, yeah, mortgage rates are certainly taking their toll on home buyers, but home builders still seem to be betting on growing demand. Applications last week tanked again, with purchase and refinance volume falling to the lowest level since February. This is the average rate on the 30-year fix rose last week for the third straight week to the highest since last October, and last October's rate was the highest in 22 years. I'm sorry to say they've gone higher this week. Now, while demand for mortgages to buy pre-owned homes is way down, demand for mortgages to buy newly built homes is rising, up over 35% in July from a year ago. And that is likely why single-family housing starts rose in July as well, up nearly 7% from June and nearly 10% year over year. Building permits, which are an indicator of future construction, they were flat for the month and up just over 1% from the year before. But builder sentiment did drop sharply in August, with builders citing higher mortgage rates in addition to higher costs and a lack of land and labor. The wild card in all this is multifamily. There's a lot of supply coming to the market now, and apartment starts aren't cooling off a lot, and rents are coming down a little bit, but there's still strong demand. So.
Let me see if I'm understanding this. The new home, the buyers of new homes remain pretty strong, and so
Yes.
home builders, but the existing home, the so-called existing homeowners, they're staying put.
Yes, so there's no supply on the existing home market, and that's why you're not seeing any demand for mortgages. And because rates are so high, people who might have wanted to sell.
I don't know if you can hear that. The cat's throwing herself against the door. She wants in really bad.
Yeah, no, that's absolutely true. And then those houses, in the few that are on sale in my particular town, they are still going way above the asking price because there are so few of them.
Exactly. Bidding wars, multiple offers, and people really stretching. In fact, using lower cost loans like ARM loans, which have lower rates, adjustable rate mortgages, that share is actually rising as people try to save money on the mortgage side so they can pay more for the house.
Something we have not seen in a long, long time, the popularity of ARMs, though I remember them so well in the 80s and 90s. All right, guys, stay right there if you don't mind, because while higher rates continue to hinder the mortgage demand more broadly, they actually might provide a sort of silver lining to our next guest. Shares of mortgage lender Mr. Cooper Group are up a whopping 41% this year. So
That's who bought my loan out, Mr. Cooper.
joining us now is Jay Bray.
They bought my loan out, Mr. Cooper.
Jay, welcome. Good to have you with us. You sort of have the mortgage market straddled. You're a large mortgage servicer, but you are also an originator. So talk to me about those two sort of rivers of business. Which one is doing best right now and why?
Thanks, Al. It's nice to be here. The servicing business is crushing it. We have both in the origination side.
Nice job there, Mondo. Nice job.
Homeowners, Diana said it well, existing homeowners are staying in their home, and that's great for the servicing business. So it's doing incredibly well.
And the origination side of the business less well, I would think.
Absolutely. That business has slowed down dramatically. And, it's really all due to rates. And, we don't really see that returning for, probably until sometime next year. I don't think rates will go down. So, we are investing in our origination platform. We want to be ready for the next cycle. But right now, it's all about servicing.
And Jay, you mentioned a couple of months ago that with all the bank consolidation, with them trying to get out of the mortgage market, that there would be opportunities for companies like yours as you take on some of these assets. How has that played out?
Played out just like I said. It's been fantastic. I mean, if you look at the marketplace today, there's a lot of servicing that's being sold, and we've been a big beneficiary of that. We would have acquired this year already over $100 billion in servicing, and so we think that trend's going to continue, and don't see it slowing down anytime soon.
And obviously, distress in the mortgage market is next to nothing right now. But as we see the home builders with high prices,
10K day there, Mondo.
buyers really struggling to get into new construction, maybe paying more than they might have wanted to. Do you anticipate over the next coming years that you might see some distress in the market because people are stretching so much?
I think you can see some distress. To your point, we're not really seeing anything right now that's concerning. Home buyers have a lot of equity, or homeowners have a ton of equity. But over time, you know, you will see some stress, but I think we're probably a year to 18 months away.
I want to talk about yet another thread in your business, and that is the home auction business, which you're in, right?
That's right.
Home auctions. And I was speaking to a dear friend of mine who is from Australia, and he says that almost every home in Australia is sold at an auction where people go and actually bid. Do you talk to me about that line of business? And do you see that as something that could be a growth avenue for your company? Will people become more accustomed to going and actually bidding in an active way at auction on a home?
You know, Tyler, I do think it's going to come. I think there will be a marketplace where you will actually see retail homes being sold. Today, our auction is predominantly focused on the government program. So we sell through our marketplace that's called Zone. But yeah, I do think you're going to see, you know, a marketplace where people can actually go and list their home, and there'll be a competitive bidding process, just like you described in Australia.
And just looking into your crystal ball, I keep hearing everyone say, well, mortgage rates are high right now, but we expect them to pull back in the fall. And they've literally been saying that for months now. We just continue to see them push higher. You're in the business. In your crystal ball, where do you see rates going?
I do not see them the way I think about it personally is I don't think you'll see rates come down until probably second quarter of next year. I think rates are going to stay higher.
Okay, U.S. Steel, C pivot, U.S. Steel.
Just the strength of the economy. I think rates are going to stay higher for longer.
If rates go up, I mean, typically speaking, if rates go up and stay up, you would think that would retard price growth, but it doesn't seem really to have done that in a big way.
No, you're talking about home prices?
Home prices, yes.
Yeah, no, because of the supply. You know, like you talked about earlier, there's just not only, I mean, there's millions of homeowners that have the 3% interest rates, right? And so there's no incentive for them to sell. If they did sell, where would they go? So I just think because of the supply imbalance, you're not going to see, you know, prices come down in a significant way.
All right, Jay, thank you very much. Diana, thanks for sticking around. Appreciate it, both of you. Thank you so much. And that, folks, does it for the exchange for this hour. Coming up on Power Lunch, an exclusive interview with two power players in the auto industry, the CEOs of GM and Hertz.
Microsoft, nice follow through there.
On the demand for EV rentals and the road ahead.
Netflix turning.
The charging infrastructure, you do not want to miss that. And there, let's take a look in the studio next door. No, we're not going to take a look at Courtney Ray. I'm going to wander over there. I had lost a step.
Okay, nice work.
We got the bed minutes coming. We'll see you then.
You think? All right, so ran into resistance at 44.30. We got the minutes coming out, 2 minute warning. Fed minutes. This could all be for naught. Naughty, naught. Let's see what they're going to do here. 2 minutes, less than 2 minutes to go. Less than 2 minutes.
Remaining now.
1 minute to go. Fed minutes.
invesco.com.
Welcome to Power Lunch. I am Courtney Reagan alongside Tyler Matheson. The Fed releasing minutes, just minutes away from releasing the latest Fed minutes. Let's see what we have ahead going into this for the major averages. The Dow, the Nasdaq, and the S&P 500 all lower, but only slightly so. We'll see if anything changes here. The Nasdaq off nearly 0.5%. Before we get these results, it's been
Nice job, Mondo.
a muted day here, at least right now, before we hear more details on the Fed's thinking. Will they hike? Will they pause? We'll have to wait and see. We're going to discuss everything and see if the market can make some moves. Of course, watching the yields in the 10-year.
Is that the banking system is sound and resilient, are likely to weigh on the economy. That amid uncertainty about monetary policy lags, participants said the rate hikes are working as intended. Participants still saw below-trend growth and softer labour markets as necessary to restoring economic balance. The participants said a gradual slowdown in economic activity appeared to be happening, and said that inflation was still unacceptably high, and more evidence is needed to be confident that price pressures are ebbing. Participants said that the labour market is still very tight, although signs emerging that the labour market is in better balance. The uncertainty of the US economic outlook remains elevated, according to the Fed minutes, and future Fed policy decisions are to be driven by the totality of data. And most participants said inflation risks could require further interest rate hikes, and said that a number of participants warned of risks of accidentally tightening policy too much. A couple of participants favoured holding interest rates steady at the July meeting. However, a number of Fed participants saw economic risks becoming more balanced as well. So the Fed staff no longer see the economy entering a mild recession this year, now see below trend growth in 2024 and 2025. So following the Fed minutes, there are not a huge market reaction to the bit of whipsawing in the S&P 500 and the dollar tonight. Also, on top of this, we're seeing some comments from the White House that China's GDP growth is very low and data has transparency issues as well. So again, just to recap some key comments from the Fed minutes there is two Fed officials favoured holding rates steady in the July meeting. Most Fed officials, however, saw a significant upside risk to inflation and that inflation risks could require further tightening.
Low tick alert minus 800.
All right, so we got a roll over here. All right, so there you go. Most participants said inflation risk could require future interest rate hikes. Okay, so there you go.
Extreme low tick alert.
Extreme low tick alert. A couple of participants favored holding interest rates steady at the July meeting. That's what Citigroup said this morning, that they felt that there would be some dissension between the ranks about continuing to raise rates. All right.
The US 10-year Treasury yield little changed at around 4.245% over the 2-year yield at 4.965% after the Fed minutes there.
US Steel looks like a C pivot trying to form here. US Steel. Need this higher low to print, 31.50. and then look for a higher low and, excuse me, a higher high. D print would put us above 32.10, 32.25 on US Steel. So we've got an ABC so far, it looks like, on US Steel. Here's US Steel. Okay. So let's go to the 2-minute chart. You can see A, B, looking for a higher low. Your stop will be underneath 31.25. If this turns and starts to run higher, you can put a stop under here and look for a push beyond 32. I got a feeling that we're going to get some sort of resolution. That's just a feeling. It's not a guarantee. ArcelorMittal weighing a possible bid for United States Steel. That hit the tape right around 12:30ish. Right around 12:33, that hit the news wires. ArcelorMittal out of Germany weighing a possible bid. I got a feeling deep inside. Oh yeah, I got a feeling that the SEC is going to want to keep U.S. Steel in the country. I imagine the Biden administration, being very union oriented, would want to as well. I know the unions want to keep it here. I think they would raise holy hell if they even considered ArcelorMittal. So maybe ArcelorMittal is working in concert. You know how these guys work, working in concert with Cleveland Cliff to get this a bit higher. Or that doesn't make any sense, does it? To get U.S. Steel to accept an offer above 35. Yeah, yeah. Can you imagine? Can you imagine if we had no steel during World War II? Yeah. There's also bricks. Bricks also, Mikey, on August 22nd. Yeah, the insurance companies took a lot of hits in the Florida, that hurricane. Yeah, of course, David. Yeah, I would agree.
This stream is sponsored by TixRite. TixRite allows you to actually hear order flow futures, forex, and stock instruments. Get a free trial at tixrite.com.
Oh boy. All right, so US Steel coming back to test VWAP again. So no follow through. All right, so a failed pattern at the moment, US Steel. S&P 500, we're looking for a higher low and a test of VWAP now. Okay. So the Fed minutes are done. Market goes, meh. Fed minutes out.
US dollar index rising following the Fed minutes. The last advisors got 2% at 103.4.
Low tick alert -800.
All right, so we're coming down. 4,400 is on everyone's mind. 4,400.
Extreme low tick.
All right, we just took out the low of the day. Just took out the low of the day. All right, and we're reversing off of that, taking some stops out there. Stop hunting. All right, X, US Steel, still has a chance to make a C pivot here. Or a B pivot if it's late in the day. Sitting at the low. VWAP is down and to the right. So if this was a bullish trade and things were reversed, we'd have price above a rising VWAP. You'd look for more upside. In this case, we got a descending VWAP. Prices below, you'd look for more downside. Incorporate gamma levels, and you have some support and resistance levels to bounce around inside of this descending VWAP trading range that we're in. Continue to drop lower highs and lower lows. Right now we're at the low of the day again. I still haven't seen my local grocer change the price in the Dunkin' Donuts. I get like a 20-ounce bag of Dunkin' Donuts, vanilla foo-foo flavor, but it's $17.99 a bag. And when we first got here, and 3 years ago, in August of 2020, after COVID hit, we came down here. It was $7.99 a bag. Gasoline was $1.62, $1.65, something like that at Walmart. And now it's what, $3.66? So that's a pretty decent increase in gas. And we haven't even got back to where we were over a year ago when it was much higher. That can't be good for Democrats for talking points, gasoline keeps climbing. The politicians love to blame each other. Not to bring politics into the trading, because we're just sitting here at the low. And if you look at gasoline, this is more of a non-political commentary. Here's gasoline. Okay, lately it did bounce at the 50-day. Now we're turning back down. So gasoline, a product of interest rates and the dollar. What is the dollar doing? The dollar breaking higher. It's breaking out. Now, if you were looking at this as a trade setup, you'd be looking at this breakout above 28, 29 as a bullish trade. All right, RSI is getting a bit overbought, but US dollar is trading. Let me go check intraday. US dollar intraday. That's a headwind as it moves higher for companies like Microsoft. The US dollar is at 103, just tagged 103.45. The dollar just tagged 103.45. So it's above the 200-day moving average, making higher highs and higher lows. 9 and 21 day have crossed up through the 50. Again, if this was a stock that you were looking to trade, you'd look for this to move higher. That is a headwind. That's a headwind for equity bulls. 10-year. Now, the 10-year is marching higher, but there is the IG spreads. IG spreads, that's the spread between the same duration, just different grades of bonds. And that spread needs to, what we're looking for, a signal there. If it starts to reverse or it starts to narrow, that could indicate that we're starting to see the highs in the 10-year. For now, the 10-year is rising, so that's bearish for the markets short term, and it's happening during the 6 weeks that you would expect. During this time period, we're looking for weakness between August 16th and September 30th. That goes back 20 years. 20 years of data. The average for August 16th through September 30th is about 2.83% decline. Now, the caveat is that we've got NYMO at minus 80 this morning. That's turning up. That's at minus 80 again. Minus 80, NYMO, minus 80. Just hit minus 80 again. Multiple readings at minus 80. NYMO.
Treasury yields climb, 10 and 30-year approach Tuesday's highs.
Okay. S&P. All right, so we got a nice little spike there. All right, expecting more choppiness. I'm going to make something to eat for lunch. I'll be right back. Whoa, here we go. Here we go.
High took alert plus 800.
Oh, that's a little loud there. Okay, I'm back. I got some crab, nice crab spread and crackers. I'll be here with you for lunch. Let's see what these guys have to say. Excuse me. Excuse me while I kiss this guy.
Thanks, Nicole, for having me on. Yeah, I think the minutes from the meeting, aren't too surprising for us here at Fort Pitt Capital Group. We think the Fed's kind of in, as they described, a wait and see standpoint. I think the market has started digesting the fact that, hey, maybe rate increases aren't going to be occurring any longer. But on the flip side, the rates are going to stay higher for longer. I think we're starting to see some pricing pressures in some commodities like gasoline and food. And while those aren't core or are excluded from the core inflation calculation, they definitely impact consumers. So I think the meeting minutes just kind of reinforce the idea that investors are kind of waiting and seeing and cheering on the fact that rate hikes are going to slow down, if not completely stop, but they're not going to necessarily cut at the same time.
So what are some of the things you're looking for? I mean, it's been somewhat of a tough August in that it caught people, on the other side of the trade. I mean, they've been getting used to some up arrows. What are some of the things behind your strategy and some of the stock picks that you're looking at and telling us about today?
Mm-hmm. So we think this is a really good time to kind of take a step back and look at where we're at. We've had a really strong year to date, almost up 20% coming into this earnings season. And we think the market is kind of taking a step back and saying, okay, there's been a lot of optimism. We saw that in the reaction to companies that beat weren't really rewarded like they were historically. And on the flip side, companies that missed were beat up pretty bad. But there's a lot of positives looking forward, especially for the market as a whole. The expectations was Q2 was kind of the trough in earnings. Expectations were for down 7%, and they're now playing out with the season almost over at down 5%. I think the market's coming to accept that that's a pretty easy pill to swallow in terms of this is as bad as it's going to get. So we're just looking for companies and positioning ourselves that should benefit in the rebound and growth. One of these names in particular is Zebra Technologies. This is a enterprise asset intelligence company. And basically what that means is they produce the products like barcode scanners, barcode printers, and hardware computers that really allow companies to track the product from start to finish in terms of logistics. So we really like this high growth logistics play, this play on e-commerce as consumers are continually expecting faster and faster in delivery. Order today, be on my doorstep tomorrow. Zebra unfortunately had a little bit of weak guidance and some sales reports, but when you dig down, you look at it, not necessarily customers canceling orders, but rather delaying orders. So couple the return in earnings or orders growth with management's focus on margins, we really think in the next couple of quarters, Zebra is going to be a really big beneficiary of this rebound in earnings, and it'll really be a strong cash flow machine.
I mean, how are you feeling about the consumer overall and how people are, I know this is about logistics and a bigger picture, but how are you feeling about folks and how they'll be spending? whether it's a consumer spending or CapEx spending.
I think your previous guest hit on it really well. That consumers are employed, and that's a huge driving force. They're continue to be employed. They have earning income. Couple that with slowing inflationary pressures. We've seen inflation coming down over the past months. I think it's going to position the consumers really well in terms of spending power. I think one of the things that the Fed is juggling is the fact that there's a lot of well-covered labor disputes amongst companies where basically the workers are finally starting to demand more money. So we think the lower inflation coupled with stronger earnings potential really positions the consumer very well to kind of drive that rebound over the next couple of months.
Let's get to Thermo Fisher and Parker Hannifin. Why those two? Do something on each one for us, please.
Yeah, absolutely. Thermo Fisher, we like a lot. So this is a instrumentation company that focuses a lot on the stuff used in labs, so microscopes and certain technologies to diagnose things. We've liked this company for quite a while. One of the big reasons is a large portion of their revenue comes in the form of what we would consider recurring revenue. And a lot of their contracts with customers are captive in that basically they say, hey, if you're going to use our products, you can't use our competitors' products. So we like that they're very well ingrained. They've had a few quarters where they've given some softer than expected guidance. A lot of that due to COVID runoff. And look, to no one's surprise, COVID has definitely decreased in terms of both cases as well as the sources of revenues for certain companies. So it was no surprise to us here at Fort Pitt Capital. So we're kind of using this near-term weakness to add our exposure there to Thermo Fisher. We think it's just in a really high growth industry for years to come. And like you said, Parker Hannifin is another company we're liking right now. And we like this company in the industrial space for two reasons. One, they have about 75% of their business in what they classify as diversified industrials. When you look at the numbers, they're serving over 500,000 customers with hundreds of thousands of different products. That's just not one that's easily replaceable. The other part of their business is about 25% aerospace. And this is one that we really think is going to be driving near-term success for the company. They just closed their acquisition of Meggitt, which extends their aftermarket OEM offerings, which is basically aftermarket.
I know she keeps throwing herself against the door.
Tend to be long-term.
I know you were in there. I can smell you.
Into the revenue streams. So we really like Parker Hannifin at these levels.
Understood. Thank you very much, Brian Jankowski, Fort Pitt Capital. Thanks, Brian. Coming up next, we're taking a closer look at the housing market.
U.S. Steel going.
Fortune's housing starts accelerating despite the highest mortgage rate that we've seen in 20 years. Okay.
I'm Nicole Petalides, coming to you live from the New York Stock Exchange every single market day, from the opening to the closing bells. Tune in to the TV America.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. Everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Welcome back to the Watch List. I'm Nicole Petalides checking in. Right now, the Dow is up 5 points after those Fed minutes. We've had a lot of volatility since we started this show. The Fed minutes broke, and we broke the fear. We'll continue to update you throughout this hour. In the meantime, I want to get back to the world of housing. Aaron Sykes is with us, chief economist, Nest Seekers International. I want to get some perspective on the world of housing.
What's some of the newest data telling us right now? What's your interpretation?
So we had a good news day for housing starts, and that's because we finally saw those single-family housing starts jump about 6.7% in April. And if we go and recap the last 6 to 12 months, we saw housing starts pretty stable. However, they are all driven by multifamily. And there's been so much discussion between supply and demand with housing, but I think that that discussion has been shortchanged because it's not a generalized supply issue. We have more than enough multifamily to go around, but consumer preference is for single family. And that's where we've had the shortage all the way since 2008, since the last financial crisis. So finally, we see those developers, particularly the independent contractors and developers, starting up again. We've seen the big guys pretty consistent because they have dry powder and they have been able to cash finance or make it through the last couple, 6 months or so. But the smaller developers really have not been doing anything. They've been sitting on their hands, kind of waiting for a bright spot. And despite mortgage rates being quite high right now, they don't look like they're going anywhere. So we have to sit on this 6 to 7% 30 year for the foreseeable future. So basically what's happening is developers are saying, hey, I've got to get these houses started. There is demand. It takes 6, 12, 2 years to build a house. So it's not these starts are being immediately available, but they're starting that pipeline so that they are available when rates potentially start to shift back, who knows, a year or so from now.
This comes on the heels of the retail sales report, which showed people shopping. So if you have a surge in single-family homes for the month of July based on these housing starts, and also permits going forward on the rise, and what we saw with retail sales that rose strongly in July, you do have economists now upgrading the growth estimates overall. Do you see that getting sidelined? Or are you feeling more optimistic? I mean, in the world of housing, you're also getting out of the seasonally hot period, right? Spring, summer is a great time. What do you think we're going to see for the fall?
I think people are prioritizing their spending towards housing. We have seen very few defaults on mortgages, which is good. However, we have seen the highest credit card balances in history recently, and that's after seeing the lowest credit card balances in history just in 2020 and 2021. So it unfortunately looks like people are still spending a bit out of their wheelhouse, but they are, on a bright note, prioritizing getting their mortgages paid on time. And that is perhaps because they have these 3 and 4% rates locked in, and they sure don't want to lose that by defaulting by any chance, because then they're, having to start all over again, with a much higher rate basis. So I think the retail sales is a bit more questionable to me than the housing is at this point.
And as we watch a lot of the home builders, many of them have been hitting 50 at or near 52-week highs. We just saw Warren Buffett's team investing in names like D.R. Horton, for example, and Lennar. That was some news yesterday that helped the group. But in the big picture here, you have regions that are doing better than others as well. Obviously, there's like the hot Sun Belt area and things like that. What's your advice to somebody who's trying to get a mortgage? I mean, how difficult has it been tighter and more difficult when I talk about lending and the credit conditions? Is it harder for somebody to get a mortgage now?
It's not so much harder to get the mortgage. It is more of an alignment of expectations about what you can afford with these new higher rates. And, real estate is, of course, local. And I really, really stress that, because we see indexes like the Case-Shiller that shows that prices have pretty much remained stable. Maybe there's a nuance of 1 or 2% here and there. But if you look at areas like where I'm based in West Palm Beach and Miami, we've actually seen prices already pull back about 15%. So that is super helpful to those looking to afford new homes when you do have that price pullback in alignment with the increase in rates. Of course, there are other areas of the country where you have the continued high prices and continued increased rates. So that's making it more challenging. But with my clients, I advise every day, I'm like, go in low. People are still trepidatious. There are some situations where people absolutely need to sell, not always, but it doesn't hurt to put the offer out. So really, really important to align your own expectations about affordability. I always recommend that, you go for the worst case scenario. And I don't like the saying, you can always refinance later. I don't like that at all because it aligns those expectations poorly again. So just look at your absolute worst case scenario, and then hopefully things will brighten up once we have a bit more stability in the market.
And there was really a feeling within the Home Depot report when you think about the do-it-yourselfers or people that are doing stuff for their houses. That was a mixed report, and a lot of the analysts saying that the worst is behind us when it comes to that too. Erin, great to see you. Thank you for being on today. Erin Sykes at Nest Seekers International. Appreciate it. Still ahead in the second half of our show, we're putting AI front and center. It's in focus, the ETFs that could help to broaden your exposure to this growing technology. Coming up.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade...
All right. That was a quick lunch. Watching U.S. Steel. The markets are back at VWAP. If you were thinking about puts, this is the place I'd be watching for puts. Me personally. That, and if we get above VWAP, 44.50. But I'm looking for, if we get rejected here, then that would be an area to think about puts. Maybe for tomorrow. Or puts today, calls tomorrow. All right. A lot of stocks getting rejected at the same time. TJ Maxx bouncing off of VWAP. Around 130 or so. TJ Maxx. It's 240 on the East Coast, the best coast. Looking for, don't get offended. I'm just joking around. Looking for a bounce here this time of day after 2 o'clock, after the Fed. 2:15, we bounced. We ran right back up to VWAP. And now I'm just watching how we handle VWAP. Do we get back above? VWAP is starting to flatten out again. If you notice, VWAP is starting to flatten out. So we mean reverted back to VWAP. That puts us on the daily chart. That puts us on the daily chart. Still below the 50-day, right? Still below the 50-day. Will this be a 3-candle reversal? Only tomorrow can tell us. But if yesterday was a bearish day, we have a doji today, tomorrow turns out to be a bullish day, that could be considered a Morningstar doji pattern. All depends on how we close. The caveat, of course, is that we've been in this descending pattern since the 27th of July. We turned and started moving lower. And at the same time, the 9 and 21 day have rolled over. Now, that's the short term. The intermediate term and long term are still very much bullish. We're just pulling back. So let's see, weekly. Do I have a weekly? Let me just do this. The weekly time frame, the S&P is in an uptrend. Okay, so we're building this big cup pattern. Brother Bill pointed this out a few months ago. I was looking for more like a resistance at around 43.25. We got above that August high. Right now, it's a big cup and a handle forming. The 21 on the weekly and the 50 on the weekly all turned up. Intermediate term, we're still moving higher. And longer term, we're still trending higher. Okay, so we've made higher lows and higher highs on the monthly time frame. You got the monthly MACD crossing up. Is it a double top? Well, we got to get back up to that level first, I would think, or get close anyway. 4,800. We're close. A double top potentially, and then a move back down to the monthly at 2584. That would be closer to the value area. The value area for the S&P with a 15 PE is around 2880, I believe, last time I looked. Okay, so the S&P can trade at bullish or extreme valuations for a long time. You saw that in the year 2000. All right, let's see. S&P earnings. There we go. I can see where we are. Okay. A 15 PE is considered fair value. You can see where we are. We're 1,800 points above that level right now. Potential to produce a double top, potential for recession, which hasn't happened yet. Potential for the Fed to keep rates higher for longer. Potential for the 10-year to move higher. All of these things in the short term are, creating a headwind. So we're not going anywhere yet. Long term, some people are looking at 2,600. I guess we could see that at some point, but some well-informed institutions, analysts, been talking heads, been talking about 4,400 by year end. So do we just stay here? I don't know. Price right now is still pretty resilient. Okay, so that's the longer term. The short term, the ultra short term over the last few weeks. If you look at the 60-minute, that tells you what you need to know. Okay, counter trend rallies only. Okay, this is the 20 EMA on the 60-minute. Counter trend back to the 20 EMA. In this case, I'd be looking at 44.50 because that happens to be a major gamma level. We bounced off of that level over here. On the 11th, we bounced, moved up to resistance, came back down. We lost that level, 44.50. That's the next gamma level that we need to get back above. We bounced at 44.25, 44.20 with 4,400 below. It looks more likely that we're going to come down to 4,400 than it does to reverse. We're putting in some dojis here. So if it turns out today is a day 2 of a 3 candle or a Morningstar doji pattern, then we're looking for a bullish day tomorrow. A bullish day that would put us back above the 20 EMA and eventually get this to turn. So we're just watching price, see what price tells us. Okay, there goes the US dollar. Bitcoin US dollar is reversing. Bitcoin US dollar just popped off the low. Keep an eye on it if you're trading any of these. BTC. Big candles equal shorts, covering. These first couple of candles on the Bitcoin. Looks like Bitcoin's turning. BTC, USD. Whoops. BTC, USD. Okay. All right, so that looks good. 15-minute. Okay, nice reversal off of this low. We still need to get it back above 30,000, stay above 30,000, eventually get above 31,600 to get us a breakout. Coinbase was issued approval to trade futures, crypto futures, so maybe we'll see that in the short term in the next few weeks. All right, so we're hearing some more bearish flow coming in at the moment. Bearish flow coming in. Got rejected at VWAP. So if you bought puts right there, those are working. If you bought puts at VWAP, I like to buy a VWAP on a bounce when we're spending most of the day below VWAP. Rivian, trying to get back above 22. Rivian after dipping post earnings. I got a feeling that we'll get some buyers to come in, Rivian.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio.
tool. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education.
Okay, we're moving right back down to the lows. 44.24. Low of the day around 44.14. Pre-market.
It's an entire trading experience that pushes you to be even better. Just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Schwab Network's like no other financial media you watch because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. Everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough,
Extreme low tick alert.
never take our eye off the ball, which means we're always ahead of our peers.
Welcome back to the watch list. Time to take a look here. Cisco Systems ahead of company's earnings after the bell today. And for that, we'll bring in our panel. Eric Zuckerberg is with us, Senior Research Analyst at JMP Securities and Citizens Company, and Keith Snyder, Equity Analyst at CFR Research. Thank you both for being with us. So, Eric, let's talk with you first. All right, you think in line? Why, and what are you going to be focusing on?
Well, I think the are likely to be relatively healthy. The situation with Cisco, as with a number of hardware vendors, is they've been shipping a lot of orders out of backlog, and I think the availability.
I'm looking for bear flags.
Supply chain in the broader market. So I don't think the focus is much on the quarterly results, but much more on their outlook. This is the end of their fiscal 23. I think the biggest focus will be what the top line looks like for fiscal 24. We're expecting modest growth. That might be a little bit optimistic. I'm a little concerned from a macroeconomic perspective. So there's certainly a chance they could dial that down a little bit.
So, I mean, when you said our checks suggest underlying demand is slow, so that I can understand why there may be some concerns about what the outlook may be, and it's always about the guidance, isn't it, Keith? Tell me about your strong buy on this one. Near term and long term, what do you think here about Cisco?
Yes, I mean, coming into this quarter,
All right, a little bounce. Okay, that technically we could see a higher low. So if you took puts at the VWAP, take profits there.
still there. We saw from the likes of Arista and Juniper, enterprise growth really stepped in to offset the expected decline to the service provider and cloud spending. We really are digesting these huge levels of inventory they built up over the last few quarters just because of the supply chain issues. And so, near term is did enterprise step up for Cisco like it did for Arista? Long term, obviously growth is going to come down from the 10% that we're expecting them to close out this year at, but how much is it going to come down? And it's going to be interesting to see their commentary around what they see. Are they going to pick up spending again in the future? And is that fiscal 24 for them?
Right, and when we talk about data solutions and some of the supply chain issues improving overall, right, and subsiding. So, Eric, at this point now, when do you change a little more optimistic? And is this a Cisco issue, or is it just that you're maybe a little cautious
Cisco has been market share losses. The company has been trying to expand beyond its core networking equipment sectors, and they've had some mixed results there. And so I do think that they've had some success in some areas, but we would like to see some market share gains across some of the other areas. Cybersecurity is certainly an area that's of great interest to us, and we'd love to see Cisco execute a little bit better there. Observability is an area that's been a hot market, and they've got their foot in that market, but we'd like to see Cisco there, and similarly for their collaboration products.
Trying to move away from what the core business was, and so many of the companies have to do this innovation and sort of change the time. Eric, did you have another comment you'd like to apply?
Yes, we've been fans of Arista Networks.
All right, so looking for follow through on steel.
They have a relatively high exposure to cloud service providers, and that's been a little bit of a rock market as of recent. But their growth trajectory is very impressive. Even after slowing, they grew in the upper 30% range versus Cisco, which is kind of in the mid-single digits. And I think that
Yeah, U.S. Steel was a trade from Monday. Okay, so if you're coming into it late, when I say it's about to go, I'm thinking about taking profits off in the straight, not buying at the high of the day. Yeah, it would be nice to see 35. That's the offer, the latest offer from S-Mark. I would think if S-Mark makes 35 offer and Cleveland Cliff really wants it bad, maybe they offer 40. I don't know what numbers they need for it to work out for them. But if you look at U.S. Steel, the monthly chart, it peaked in 2008. U.S. Steel, the monthly chart.
Still carry a premium in the market. They haven't been pretty commoditized like lower speed hardware has. And so, this is a big win for Arista. And, it's going to be very interesting to see if Cisco kind of echoes their call with another obviously Cisco that we didn't get with Arista.
Okay, so we have a buy and a sell on Arista. Thank you so much. But we'll be watching the Cisco numbers we discussed. Eric Zuckerberg and also Keith Snyder. Thank you both very much. Great to see everybody. Thanks for being with me. I'm Nicole Kennedy right here at Market on Close today.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources built for TD Ameritrade. You'll learn tips and tricks from navigatetdameritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by answering directly with an education code. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders,
Okay, US Steel looks like it's trying to make a higher low here and a higher high. 35 is the latest offer. S&P, a bear flag breaking down. Okay, US Steel pushing higher.
Low ticker at -800.
NVIDIA, NVIDIA oversold. Stochastics on multiple time frames, looking for NVIDIA to get back above yesterday's levels. Got about 10 points to go. Another bear flag on the S&P. Still looking for a higher low, S&P. Let's go to the 5 minute. 5 minute. Too much noise. Okay, looking for a higher low. Or for price to take out the low of the day, in which case I would stay more bearish. The 60 minute 20 EMA is telling us to be bearish. Look for counter trend rallies. Come on, US Steel, let's go. US Steel about to take out the high. The evening session, trying. The high of the day on US Steel was right around 1240, right around $32.15, $32.15. The offer was for 35 from S. The recent offer. Be cool if Nucor Steel bought them. I like Nucor, well-run company, Nucor Steel.
That's important because if you see funds like our stocks, growth category, kind of mired in the muck and down near the lows, it's going to be hard to really get a story going about the next leg of the bull market. Now, granted, ARK never really had the big comeback that we saw in some of the other names, and it's a good representation of how this market has sussed out winners from losers.
SPY.
For a company like Cisco is really important because we see the market treat value companies and the profitable businesses totally different from unprofitable story tech stuff like the ARK fund. We've got a big separation between businesses that make money reliably and have some growth potential between those that are pure growth and pure valuation trades. Cisco trades at a valuation way below a lot of its big tech peers.
We're just drifting lower. Market's just drifting lower. Not much to do.
This week, got Walmart 2 coming up tomorrow. Cisco tonight needs to deliver something to give bulls some hope that winning charts like chip makers that can offset the declines that we're getting elsewhere and give some pushback.
Low to go at minus 800.
Coming together here as it pertains to the bond market and the pressure from interest rates. Let's bring everybody to Kevin Hanks. What do you think, Kevin? Is that the right way to think about this afternoon? Is this an important moment for a winner to possibly emerge? Because we just keep fading every bounce right now.
Yeah, I think this is a market, Oliver, struggling with what does strong economic data mean, right? What can we rally on strong economic data, or does the fact that the dollar rallies, yields rally, what does that do for stocks? And I think we're just going through a very heavy. It's not in some of these names. The news out of China, the economic data strong here in the U.S. is kind of putting traders on their heels a little bit on whether they have what it takes to carry this market further at least in the near future. Not a lot of, I think NVIDIA's earnings next week, Oliver, are enormous in terms of re-energizing this market, or the opposite on the downside, obviously. If that happens,
Okay, we're pushing lower. Yeah, this market's not ready to rally yet. Not the way it's trading.
I expect Jerome Powell to address that next week in Jackson Hole, and this market's just having trouble catching a bid. And when it does, Oliver, it doesn't stay around very long, as you noted.
Yeah, that's a good way to describe it. It is heavy, right? We just kind of sink.
The news isn't perfect. Yeah. Okay. Now there is some news. We've got actually a little bit of merger discussion to have here, I think, as we zoom in on a couple stocks. Intel down 3%. Certainly not helping the market, Renita. It hasn't been a hero by any means, but it doesn't help when you have a major chip company continuing to stumble basically with every step.
And it's down because of its failed acquisition.
All right, testing the low. Do we bounce? It's possible. I don't like the markets at the moment, at least not for longs anyway. The longs are not working that well. Down, the trend down, still persistent. So any bounce, I'm looking to short, like the bounce back to VWAP. Now that we're at the low, I'd probably be taking some profits off. Keep a couple on in case we drop some more.
Low ticker minus 800. Extreme low ticker.
Yeah, that looks good, Russell.
Chinese regulators failed to approve the transaction show just how much the U.S.-China trade tension, those are disrupting plans for some major American companies. And because of the timing, this definitely shows through. It comes after the White House.
That's Chris Shavako. Oh, that's interesting.
So it's hard to tell what more could come out of this type of situation. But for now, we know that this acquisition will not happen.
Yeah, and paying up for that misstep, and a pretty sensitive company generally over the last year as it's fallen behind some of its major peers and the big growth potential of NVIDIA and others not finding its way into the Intel story, but it still has been up and it still has rallied, and that's where I do think it matters here, Kevin, because ultimately this market, as you put it, needs something good from the tech space in particular. Valuations have moved up, and I feel like this move in Intel gives us a reason to.
Okay, big drop here.
Basically, any imperfect news in the group. Maybe we have been priced to perfection, as they say in this rally.
Yeah, I think if you're this sector of the U.S. economy and you're looking for Intel,
Okay, that's a pretty big drop there.
you may be setting yourself up for some disappointment there because I don't know, even though the size and the sheer scale of what Intel offers, not sure they have the chops right now, like NVIDIA and AMD does to get to the next level. And in the history of Intel, that's been dealing with a lot of bad news lately, this is just another ding in the armor of Intel. They got to pay $353 billion for the deal. That's not great, and the stock is heavy based on this, but this is just another attempt at Intel to get relevant that's failing.
Yeah, I have to say too. I said this morning as well. I feel like at a certain point, the market's going to really have to hold Gelsinger to the fire here to some extent, because we're dealing with big deals right now, and especially China companies. And you're more than likely going to run into some extreme resistance. Thanks, Kevin and Renita. Let's talk to Danny Kirsch this afternoon. Have options. Piper Sandler has got some China and commodity moves on his mind. So Intel's deal doesn't go through, but the bigger concern with China has been less so about regulation lately, Danny.
All right, U.S. Steel, S&P making a new drop here. All right, more downside? Okay.
Economic backdrop here. We keep ratcheting up GDP expectations, but in China they like to keep ratcheting them down.
Yeah, and let's not forget they also decided to not give out unemployment information amongst the youth. It just seems like they're trying to, like, the black box is getting a darker shade of black, and there's less information you're getting. It's clearly slowing. There's actually deflation. Data keeps coming in softer than expected, and this overall, I think there was a lot of hype, a lot of excitement that perhaps there was some
green shoots coming over the last few weeks, and then we see that data's been terrible, not enough stimulus. You have country guarding, the real estate issues haven't gone away. This bubble that's been built for the years and years and years. It's also harder to pop, right? The CNH now I think is 730 versus the dollar. In 2015, which I think is an okay comp to what's going on because they're doing this surprise rate cuts overnight, the CNH was around $6. So there's just less room to continue to
Yeah. These next 6 weeks, yeah.
the S&P sold off around 15% over the course of the next month and a half, and then we had this huge global slowdown. And perhaps that's what we're seeing. It's like it sort of got that vibe yesterday. You had that, or 2 days ago rather, when there was the surprise cut overnight, currency weakened more. You have horrible eco data coming in. You've got this deflationary environment. But the difference is this time there's less leverage to pull than there was last time. That's not to say there won't.
Low ticker at -800.
The stronger dollar is better.
The dollar right now seems to be moving with rates. Is the trade
All right, moving lower.
bet that China will stoke their economic situation through some stimulus, as they did with that company rate cut this week? Would that add then to the potential for rates to lift off?
Perhaps. I'd say the issue is
Okay, looking for a bounce. Close to, we tagged 44.10.
larger sell-off in China is that volatility has not reacted yet. So as if you want to get long China, if you think it's the time to buy, this is what I'll say. Options have not gotten much more expensive on an implied volatility basis throughout this sell-off anywhere. It's almost like the market's been very comfortable implying that.
You got 44.10. Okay, that was a pretty good target.
If you looked at implied volatility only, you would think the market was flat this month. And FXI, the Chinese yen, is sort of the same deal. So to me, it's like if you want to take a shot at China, let's make sure you buy like 1-1 straddles in case this gets a little more unruly because if it keeps going down, you know that you're going to get a fall pickup. And if we rally, it's going to be big. It's not going to be big. So to me, it's like this thing's been selling off pretty aggressively since August started. If you're bullish, you could buy calls, but I think you're just better off buying straddles because you're not really paying up relative to what they cost.
US Steel at BWAP. Still below the 35 offer that S-Mark put out there on Monday after the close, I think. They offered 35 for US Steel. It's probably worth more than that. Let's see. Fast graphs.
Extreme low ticker at -800.
Okay, S&P, we're going to go further. We're going to go further on this.
Eventually, perhaps something breaks and you get that bigger ball push. But something like China, something like the something that's a little more volatile. Typically, implied volatility is still very low there. And even in the S&P, if you want to hedge, it's just very inexpensive relative to how much we started with.
Got it. All right. So not even really direction, just assuming that the ball's going to pick up basically. And I mean, right now I'm watching bonds just continue to drop throughout the day. The dollar keeps going higher, so it seems like the volatility is certainly in those assets.
Absolutely, man. I think you did a nice job highlighting like things about to break. Like if the 10-year breaks out of this range to the upside, that's when you start to see I think equity volatility take off as well, and people start really figuring out if they want to own expensive tech or long duration assets. Especially when the alternative, which is getting more and more interesting, is now whatever a 10-year bond that yields 4% or a T-bill that's yielding 5.25, 5.5. It's like that becomes much more interesting, especially when you're already sitting on the S&P's at 14, 15%. this year. It's like people start. I think we have a hard time exiting out of their plus 15% year and moving to something safer where they can get a risk-free 2.5%, 3% for the rest of the year. So it's like I think that could be that moment if we get next week we have Jackson Hole. If that's a hawkish push, do you remember last year right after Jackson Hole, we had that very short speech. Market proceeded to sell 17% over the next 6 weeks. We could see that moment next week. There's nothing priced in. It's just very. It's a little odd to me. It's like this is a great time to be using options. And if you're bullish, and you think gold will actually be dovish at Jackson Hole, again, like this is something we talked about last time. It's just very inexpensive to replace long delta calls or to hedge your long positions.
All right, bingo. Trade and the message received. Danny, thanks for the explanation, and always appreciate the insights into what you see. Very interesting. Absolutely. Not necessarily bearish, but certainly cautious tone if rates break out. Otherwise, just bet the volatility picks up, regardless where we go. Coming up, let's talk some more earnings, data, and retail as it connects to the consumer. We had a nice print from retail sales. And Target's number wasn't exactly a beauty, probably far from it, but shares have been all right throughout the day, losing some of their momentum early, but still up. We'll go back to take a look at that number because we still do have Walmart ahead of us.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the options for volatility course, we explore what implied volatility is, how it could potentially affect the price of an option. For example, say an option trader wants to take a bearish position on stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish. So looking beyond direction to consider the impact of implied volatility can help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the education tab on Thinkorswim for full options for volatility courses and a whole lot.
All right, kind of been back and forth. We're at the low right now. Another bear flag potentially. 4409. Wow, 4409, 4410. I didn't think we'd see it, but hey, what I think and what happens is two different things. Price is king, market voted, and S&P is at 4410. That said, we have been watching how the markets are trading, and we know that as long as we're in this downtrend, we have to get back above 4450 for starters, I would think, to break this trend. 4450, got to break through the 20 EMA. 4500 would definitely do it. Break this downtrend and get this market turned back up.
I'm not sure. When you're trading at a 52-week low, which was what they were yesterday, you're 50% off the highs. All it takes is just a little bit of good news to drive the shares. If this was any other retailer,
Low ticker at -800.
there was nothing, very little in this quarter that was good. Lower guidance down 9%, e-commerce comp declined over 10%. But the only thing I could point to was better margins. And I think it's important.
Okay, SPY continues to make lower lows. The trend is down. Folks, we got to get it back. We got to get back above 4,500 to break this downtrend. So until that happens, we're probably just going to see more carnage. Honestly, doesn't I hate using that expression. Honestly, makes it sound like I'm not honest most of the time. Honestly, though, I don't. I'm not that worried about the markets. The short term, this time of year, we expected over the last couple of weeks, we expected that we could see a weak second half of August into the month of September. That said, we do have NIMO grazing along minus 80 at the low. Oh, it's minus 85 now. NIMO minus 85 now. NIMO is minus 85. AMC. AMC, not AMZ. So ZN, sorry, AMC. $43.80. Okay, so long as we're in this downtrend, we got to break above 44.80, 4,500 to break this. Okay, RSI, everything is like, extended. I wouldn't be surprised to see a reversal soon. For a few days anyway, maybe 5-10 days, we bounce back up. Again, the only caveat is that it's that time of year. Looking forward to October, November, though.
They don't share a whole lot with us beyond what we learn every quarter.
Yeah, well, maybe we should. Maybe they should.
Exactly.
Maybe they should. Cortex, that's
Thanks.
Courtney Reagan joining us. Coming up, forecasting the Fed, former Vice Chair Rich Clarida joins me with his first take on today's Fed Minutes. More importantly,
TJ Maxx, looking for a bounce and a follow through tomorrow. Acadia Pharmaceuticals bouncing. Rivian trying to get back above 22. Rivian. Mm-hmm.
Stocks in the red across the board after the latest Fed minutes showed officials are concerned about, quote, significant upside risks to inflation. FOMC also warning more rate hikes could be necessary. Let's bring in former Fed Vice Chair Richard Clarida. Mr. Clarida, welcome back. It's nice to see you.
Good to be here.
All right, so they're concerned about, inflation remaining sticky, if not ticking back up, and possibly having to raise rates even more. What are your own expectations? How many more hikes do you think?
Fed's trying to kill the economy. I don't know. Okay, minus 85. Pretty extreme level here. Minus 85, NIMO.
The risks are that we do get in one more hike this fall. At the June meeting, the SEP docs indicated that most folks thought that the July hike and one more would be required. And I'm leaning in that direction now. They could get data that is sufficiently positive for them that they could be done. But these minutes read like a committee that is worried not just about the baseline, but about the risk. And as your quote indicated, the risk are to the upside on inflation.
Wow. So, one more is I was wondering whether you were going to suggest that even more than one was potentially necessary. That's all you see? Because I feel like the market would take that as a big W.
Well, it could. Right now, the pricing, as I look at my screen, is under a 40% chance of getting in that additional hike this year. So it's certainly not priced in. No, I agree. I think they're close to done. They've hiked a lot.
NIMO minus 85. That's pretty extreme. Looking for a bounce.
At some point to how long to keep rates in restricted levels. But on your specific question, I do lean in the direction that there is one more hike in the pipeline this year.
I'm curious as to your reaction to, the Atlanta Fed and their GDP now. Now, it's not a forecast, it's now. 5.8% still got a lot of eyebrows going up, right? So if they're even close to correct, what is the implication, obviously, is that the economy is pretty darn strong. What's that going to mean for your prediction and what the Fed might end up doing?
Yeah, I think right now, of course, Atlanta Fed's getting the attention, and they do good work there. I think other indicators that we look at do indicate that certainly the economy entered the third quarter with a good momentum. The economy has surprised me. It's surprised on the upside this year. I think, Scott, they're probably more focused on the labor market because, we do have near
Nice bounce. Sorry, got to shift gears here. Nice bounce.
The wage gains, wage inflation is still running high.
Still in a downtrend. Once again, look for a rejection at VWAP. If you're thinking about puts, you got less than 27 minutes to go. Apple turning. I could sell those covered calls. Buy them back anyway. Apple. Could buy them back. Nah, it's not worth it. I'll buy them back tomorrow, maybe. A lot of stocks been stuck in ranges, like Apple, been selling covered calls. Every time it makes it up to the top of the range, I sell covered calls, buy them back at the low of the range. I'll wait until tomorrow to do that. But, some income while I'm sitting here waiting for the markets to start trending again. It's trending down, but I'm looking for it to trend back up on the short term. We've had 3 weeks down since July 27th. We've been moving lower.
4% inflation and 4% or below unemployment.
Got to break above 4,500. I would say 4,500 would do it. If we got above 4,500, that would break the downtrend and it would flip the 20 EMA higher a couple of days later.
Yes, look, I think that, recessions are in the eye of the National Bureau of Economic Research, but historically, we've never had a period when the unemployment rate has risen by more than half a point that has not been an NBER recession. And even the Fed itself, in its projections in June, saw the unemployment rate rising by about a percentage point. So
nice rally so far. Shorts covering off the low of the day. Shorts covering. Not a new trend yet. Trend is down. Netflix turning. Netflix had a nice turn there and jumped.
I guess this week we, that leads me to obviously
416 up to 419. A 3-point run. Very quick. In about 10 minutes. 20 minutes. All right. U.S. Steel back down to 31.
I take the Fed at its word, and we had interesting comments from New York Fed President Williams not so long ago, and this is a point others have made on the committee, including Chris Waller, which is that if the committee does succeed in getting inflation into the twos next year, then it could, and I think would start to consider rate cuts, simply because if you keep rates at current levels as inflation falls, that means real interest rates adjusted for inflation are going up, which is actually tightening financial conditions. And so I do think we can get easing, or at least a reduction in rates from current levels next year if inflation does demonstrably fall into the twos.
So into the twos, not 2%.
Exactly.
Right? There's a significant difference between getting all the way back to target versus at least confident, or some degree of confidence, that we're well on our way.
Yeah. And I think, to me, that is a likely scenario, is that inflation's in the twos and the Fed is adjusting rates next year, not all the way back to the long-run destination, but easing rates in the context of inflation that's fallen a lot. And that's
Okay, we are going to fail again. Another bear flag.
Keep at it till the job is done and get inflation going back to 2. I do think that the calendar is set up and their guidance is set up for them to get into rate hikes they think that will get the job done, get those in place this year. But I also think that if they're wrong and inflation is stubborn and sticky next year, I think they'll do what it takes to get it back down to 2% over time. So I don't think the Fed wants to be the focus of attention, in an election year. But in the end, I think they will do what they need to do to get the job done.
Sure, but Powell must know, or at least he's got to be thinking about it somewhere in his being, that you would expect perhaps the current president of the United States to be talking more often about the idea of cutting rates as you get closer to an election, which we already know is going to be highly contentious.
Well, again, I'll simply say I think the Fed's communication and projections indicate that they think they're going to get rate hikes that they need in place to get them done this year. Next year's a long way away. I would say that past Feds have hiked in presidential election years. Volcker hiked in 1984. Greenspan hiked
Low ticker -800.
and 4. So if the Fed will do what it needs to do as an institution, and I'm sure that it will do that.
We're going to get more than 8 minutes from Mr. Powell next week at Jackson Hole.
Well, I'm certainly not talking to him about a speech. I don't know. I was at Jackson Hole last year. I thought it was a very effective 8 minutes. It was very clearly in his voice, and so I'm looking forward to seeing what he has to say.
You'll be there again, I suspect.
No, I'm gonna be with my family. It's a well-deserved vacation, so I will not be in Jackson Hole.
All right, I appreciate it nonetheless. We'll talk to you in the weeks ahead, I'm sure. Ms. Clarida, thanks so much. That's Rich Clarida, former Fed Vice Chair, joining us. Up next, we're tracking the biggest movers as we head into the close. Christina Partsinevelos standing by with that. Christina.
Well, it's not even 24 hours after going public on the NASDAQ, and shares of EV maker VinFast are plunging double digits. That's all that and more after the break.
Okay. We've got 20 minutes left to go for this session. For Wednesday, the 16th, Fed minutes are out. Fed's going to keep interest rates higher for longer. No surprise there. The market's giving back some. We've already been in a downtrend since July 27th. So it's not like this is new. We know this time of year tends to be more or less weak into September. And then once September's out of the way, we start to look for the institutions to start buying again. So you know that they're probably looking for a dip, right? So they want to buy at a dip. They don't want to buy at the highs. I mean, we've had a 32% gain since the beginning of the year. Why would they want to chase up here? They wouldn't. So they're waiting for a pullback. And that's what we should be doing. We should be waiting for that pullback. Okay, so now a little bit more than 4% off the high. Okay, we're gradually moving a bit lower. Do we get 5%? All right, 5% is down there near 50% retracement. Okay, there's 5% right there. Can't get it exact. Hard to do with. You should be able to just plug in the number. Stock charts makes it difficult. All right, it's 5%. 5% would be down there near 43.75. 50% retracement. 236 is right here as well. $46.07. All right, so RSI is still below 50. Okay, so if we get down here to 5%, we'll get closer to 30% and potential for a turn. As RSI continues lower, that's telling you the strength of the downtrend is accelerating and more bearish. This would have to turn back up to look for a bounce. As a product of a bounce, I would think. Stochastics oversold.
We're 15 out from the close. Let's get back to Christina Partsinevelos now with a look at the stocks she's watching. Christina.
Well, let's talk about shares of VinFast plunging right now. Only 22.5%, only 24 hours after they first went public. The Vietnamese EV maker made its debut on the NASDAQ yesterday via SPAC, hitting the market at $22 a share. We're still above that level, as you can see, at $28.70, but shares are pulling back around 25, or they were down at 30%. Now it's just about 22%. Other EV makers like NIO are also lower today after Tesla cut prices in China. So just a sea of red there. Switching gears, Progressive is having its best day since March 2020 after reporting strong results for July, posting a 21% increase in net premiums over July 2022. And that's helping the stock recover from its big drop last month after reporting weaker than expected second quarter earnings. Shares are up almost 5%.
5%. 3 to 5% is generally what institutions look for when they start to show interest in buying. So we could start to see some buying soon because NIMO was at minus 85 last I checked. NIMO minus 85 is minus 85, still at minus 85. Walmart earnings tomorrow, right? Walmart earnings. Let's see. Let me go check here. A couple things. I might want to take some puts on my Walmart position. I might want to take some puts for Walmart earnings. Okay, so tomorrow's Thursday. Tomorrow morning, we've got Walmart. I have shares. I also have some calls. I might want to, I have some December calls, the 165. So if we do pop on earnings, which a lot of people are anticipating that they're going to pop, I don't know that I want to take puts. I mean, I have a long time for these to work. It's been in an uptrend. Walmart would have to come out with absolutely awful earnings. If it did blow up, I'd lose $500 per maximum $500 per contract. So I got 5 of those. I wouldn't hold it. If I was down, say 50%, I'd just take it off. Walmart looking for a beat. Looking for it to do something like TJ Maxx did today. Walmart's been trending. We got a few people taking profits off into strength on Walmart. We did hit what, 162 yesterday? Monday, 162.78. Sitting right here. Does Walmart miss and drop? Maybe I should take some puts. Let me see what they cost. Walmart. Let me just check IV. Implied vol. Let me check implied vol on Walmart. 24%. So historical volatility on Walmart is usually about 10%. It's trading at 23%. So there's a 13% premium in there in the options you're paying up for if you buy puts or calls now. So I'll just stick with it. I'll stick with it. Maybe we'll get a nice little follow through. Okay. So at minus 85 NIMO, I'm thinking that we're going to bounce soon. 4,400 would be a good place to bounce. Get a lot of puts to monetize. As Mikey's been saying in the trading room, we're dominated, put dominated. If you just look at this chart, okay, you can see right in the thick of this, 4,400, 4,425, 4,450. So this is the major level. And then look at all the puts down here versus the spikes higher in orange. Look at all the spikes lower. So this is all put dominated there. You don't need to be a genius to be able to read this. So if we dip down and we start to move higher, a lot of these puts will most likely take profits. depending on when they expire. So there's 4,400. That's the major level we're trying to stay above. We're at 440 on the SPY. S&P is 4411. 4411. We keep threatening that we're going to drop down through this 4,400 strike. Once we get there, we'll start to see people taking profits. I wouldn't be surprised people who've been holding, like Mondo and Frano and others, start taking some puts off, taking some profits. Psychologically, you got a nice profit. You don't know what tomorrow will bring. Frankly, I was thinking that the markets would be much lower this morning. We were actually a little bit higher and then pull back. Okay, so we're going to go test the low again, it looks like. VWAP is down and to the right. Down and to the right. 60-minute is down and to the right. No reason to think otherwise. Do I want to take puts on Walmart? I keep looking at this. Walmart, I have 165 calls. And I was hoping for a pop towards 165. They're green right now, so if we pop tomorrow, there are December calls. Do I want to take puts? What are they going for, puts? And they're not too expensive. They're pretty cheap actually. So they're not looks like they're not forecasting a big drop in Walmart. The at the money put is $2, 157 in the money. In the money is 157.50. They're $2. The 155 put $4 out of the money. Those are 27 minus 27 delta. There's 10,000 of those.
But also, look, we went from 0 to 5+% on short-term rates. Unemployment stayed at 3.5%. The economy's picking up pace again. So therefore, it's not really about what happens on the short end. All that being said, the correction, the pullback is doing a lot of what it's meant to do. Sentiment is definitely getting a little bit more apprehensive. You're sort of taking the air out of the parts of the market that probably required it, like the high beta stocks and like the high flyers of the Nasdaq. That all sounds nice and easy and very orderly, and we can stomach that pretty well. The question is whether, again, it has to get a little messier because you're not seeing a lot of real jumpy activity. The volatility index still under 17 because the market itself has really been pretty calm in stepping down this 4%.
Yeah, Clarida just a few moments ago telling me, one more. Yeah. He only sees one more. I feel like the market worries that there could be another one hiding out there somewhere beyond maybe a November one.
The market is a little worried either that there could be more and that we're going to be on this treadmill for an indefinite period of time where the economy and inflation are sticky. We have to wait for the next Fed move. Or the Fed is essentially going to just stay here.
Walmart driving higher into earnings. Walmart earnings tomorrow. Walmart with earnings tomorrow.
We're not panicking, but we are aware, I think, of the two-sided risks out there in a market that already took a lot of credit for a soft landing coming into this month.
Frank, Cisco's had a pretty good year. Last I checked, I think
Net market flow still mostly puts being bought. Net market flow. Tons of 0-day puts. Okay, looks like we're going to roll over one more time into the close. Close at the low of the day, probably. All right, we got 6 minutes to go for the closing bell. Walmart tomorrow, earnings tomorrow.
product orders. That's another key metric in this report. This fiscal year, Cisco is seeing a downward trend. You can see the numbers right there. That number is traditionally released on a call that begins at 4:30 Eastern Time. Analysts are closely watching the trend and the commentary around orders, especially when you see these double-digit declines over the last 3 quarters. Sure, watching right now down out of that print.
And we'll see what happens coming up. And I'm sure we're going to hear from Chuck Robbins at some point.
That's the 10-year.
So hours as we usually do on the network. That's Frank Holland. Christina Partsinevelos, Wolfspeed. What are we looking for?
Well, Wolfspeed, just for everyone knows, Wolfspeed does make silicon carbide, a product that is squished into really thin wafers like sheets, which hold semiconductors. The company, though, has been expanding in New York and North Carolina, and one of the focuses of today's report will be on capital expenditures. How much is Wolf spending, and where are they getting that money? We know they recently signed a $2 billion deal with Japanese semiconductor powerhouse Renesas to create wafers, and also got debt financing from Apollo. That's pretty much a $2 billion cash injection, so that's good news for Wolfspeed's balance sheet. But what about execution? How long will it take for these plants to be fully utilized? Goldman Sachs and Deutsche Bank both believe results, though, will be muted for Wolfspeed, and they have maintained cold ratings until we hear a little bit more about Wolf's plans to ramp production and, of course, cut costs. Scott, just last week I was at Wolfspeed's new manufacturing hub in North Carolina, and the CEO told me that the new plant should provide 10 times the capacity of its other North Carolina plants. So now we wait and see if and when that materializes.
Okay, more downside. More downside.
All
right, we got 4 minutes to go. 4 minutes to go, folks. Walmart earnings tomorrow. Walmart earnings.
What's happening in terms of big company spending on everything IT related. I mean, Cisco itself, the way it's valued, it really is kind of cash cow. It's got like, an 8% free cash flow yield. The market is not viewing it as a real growth story, but you obviously have to have the top line keep up in order to continue the cash flow production and the shareholder which has been a big part of the story. Now, when it comes to something like Wolfspeed, really just semis in general, they're down another couple percent today and 10% off the highs. It's right in line with what you might expect given the overall market. But it's also happening when Nvidia has had another little lift. It's down today, but so much is really being concentrated in terms of all the enthusiasm for the big long-term tech stories being channeled into this one name. I mean, you have the $800 price target on there that went out today on Nvidia, which implies a $2 trillion market cap. So eyes are getting pretty big, and it's almost Nvidia to the exclusion of everything else. So can that kind of restart, the real kind of frothy part of this market, or is that going to be one of those, it's not good enough to satisfy maybe a more discerning tape?
Start talking about big market caps in tech, and obviously I go to Apple, which, on halftime today, I know you're watching it closely, right? It hasn't traded all that well of late.
No, it hasn't. If you go on a one-year basis, it's basically in line with the S&P 500 again. After it seemed as if it was kind of.
We have 3 minutes to go. Less than 3 to go. It's been fun being here today with you, giving you the play-by-play. Most of you are on the right side of the trade. The 60-minute 20 EMA is dropping. That tells you to be short against resistance, and play the downside. That's what most of you are doing today. Congratulations. Mondo did a really good trade. I think a number of you took puts as well. 4,400 is a major level. We need to hold. We'll see how that opens tomorrow, if we drop below it briefly or if we pop above it, depending on what happens tomorrow. Walmart earnings in the morning. Walmart with earnings in the morning. Dole, Billy, Tapestry, Lumentum. Okay, folks, it's been fun.
When the S&P is traded at like 20 times trailing earnings as it is right
Okay.
now, average 10-year treasury yield is around
U.S. Steel backing off from the highs.
with where stocks are. You just have to be confident the earnings are going to come through next year, and the economy can take whatever the Fed has left to do to it.
And these this conversation about market breadth that we had so often with, you know, the Magnificent Seven going up at the expense of can that really continue? Now it's sort of reversed into, well, if these
Okay, if you got puts, maybe just swing some until tomorrow. All right, folks. Oh, who's reporting tonight? I forgot to check. Let's see. We've got Cisco. Oh, Cisco tonight. Cisco. That'll be interesting. Kimball, Stone, SQM, Paycor, Wolfspeed tonight. Synopsys. All right, so this should be good. Should be good tonight. I'll be around for a few more minutes listening to earnings. I'm just gonna drop off the mic. Have a great evening, everyone. Take care. We'll see you in the morning. Ciao.